There's a saying in the markets: he who lives by crystal ball is destined to eat ground glass. Okay. What I mean is, what you don't know is very important relative to what you do know. And for that reason, understanding how to properly balance and diversify a portfolio, and that diversification should be of countries, currencies, and asset classes, is something that's important. For most investors, to make tactical decisions is not going to be the best thing they can do. They'll do that badly. And when you come to conferences like this, you will get different points of view. Right. But unless you actually have a system and you mechanize, and we put hundreds of millions of dollars, lots of money, maybe $1 billion, I don't know, into doing it technology and so on to try to get an edge. So number one is respect what you don't know and know how to diversify well. Because diversifying allows you to reduce your risk by up to 80% without reducing your income, without you reducing expected return, if you know how to do that well. Okay, then I think then what you have to do is you have to look at the relative appeal of asset classes. So when I go through that calculation, the relative cash now has a relatively attractive appeal. You know, sort of people, when I said cash is trash, and that got a lot of attention. But that's when cash was nil, okay? Now, when you look at the expected returns for this moment, cash is a relatively attractive asset class at this moment. It's not just attractive because it has a relatively decent, not great, but decent expected. In other words, it has something like a 1.5% real return, okay, not bad, and not bad in comparison to the other things, and it doesn't have price risk. So it looks relatively attractive, but let me complete the answer before you, because I see you're pulling at the bit. But then also, I think in this environment, and given the whole picture of all the things at work, there are three things that I look at as to where to invest. I want sound finances. So I look at income statements and balance sheets of countries. I want to invest in countries where they earn more than they spend, and they have more assets than liabilities. Okay. Second, I don't want to have where there's a lot of internal conflict, because the internal conflict is very dangerous. We haven't gotten to the political. We're still in the bond market.
It's coming.
Okay. But when we take a look at that element, that's a dangerous element, okay? And number three, I don't want to be in a place where there's going to be an international war. Because that's detrimental. In history, when there were these types of conflicts, the neutral places actually did better than the winners in the conflict.
What I was going to ask about is price risk, particularly with respect to bonds, because right now you can get some bonds, even from some investment grade bonds and otherwise, that have a pretty high rate on them. But instead of that, you'd rather be in cash, and is that because of price risk? Because you think what the future holds? Well,
I think what you think is a high rate is only biased by the terrible rate that you got used to. Okay, so if you take, let's say, the real rate right now, you're looking at now close to a 2%, roughly about a 2%, which isn't bad, but it isn't, in a historical sense, it isn't great either. Great is like 4%, but it's not bad. And so I just want to be clear. And then you have the price risk.
So let me ask about equities. From everything you said, it doesn't sound like risk assets are really attractive. But let me draw from your fifth force, and that is innovation, creativity, AI. Is there an exception right now in the marginal allocation of equities when it comes to big tech for AI?
Yeah. This, in my opinion, is going to be a super huge impact. Generative AI and so on. I won't get into all the reasons why, but I think it's going to be an impact. Then there are those who are doing it, and then there are those who are going to use it. I think a lot of those who are doing it and inventing are in a bubble. I mean, they're very expensive, and they themselves will be disrupted by others. It's the nature of that beast. So it's very, very difficult at these prices and so on to do that. those companies that are really knowing how to use it and to gain competitive advantage will do well.
Generative AI overall for the economy, is there a chance of letting it help us grow out of the government debt problem you had?
Yeah.
Because if we really increase productivity substantially, that must help us on the government debt.
Certainly. It can have an enormously beneficial productivity impact. For example, but it has a big impact. So, for example, combining AI and robotics, which is a new thing, is essentially making people. And okay, so those people don't have to work. But then you still have to deal with, okay, what does that mean? We have a situation, a basic dynamic here, in which some people benefit hugely, and then some people, it's absolutely terrible for them. And it's not just the middle class. So, give you an idea, there are 3,100 counties in the United States. Counties is the smallest economic unit, a county. 85% of those counties voted for Republicans and want to go back to, in a sense, more conservative roots. And then you have, you could see how the red and blue lights up. And so the issue is, as we're dealing with this, if we have the good outcome of it, how are we going to do with it? We need a real restructuring. So I think on the politics one, I just want to say the following. We are at risk of a civil war of sorts, right? We are at risk of a civil. In other words, what I mean is that there are irreconcilable differences, not only in the issue of wealth, but the issue of values, okay? Gender issues and so on and so forth. Okay, irreconcilable. And there's a questioning of whether the system is fair and will work well. When you, in any game, any sport, when you don't trust the rules or don't follow the referees, it's a very dangerous situation. And so that particular conflict, as we deal with this, there's only, in my opinion, there's only one way politically to do that, and that is that you have to have a very strong middle, okay, a political middle, in a sense, a bipartisan middle, that brings the center, mostly, which still constitutes the majority of the population, brings it together, and then is going to have to make major reforms. Reforms, you're touching on some things like, okay, what do you do should you have the benefit of that productivity miracle? How do you change who benefits? The system as it now works is those who come up with the idea, they become multi-billionaires and the others lose jobs. Okay, so how are you going to actually deal with that? I'm not saying that. I mean, I would say, I would know that if I was president or who should be president, and I'm not talking about me being president, but I'm saying if there was president, I think they should have a bipartisan cabinet. You need a center. You have to have bipartisan. And then they should have something like another constitutional convention, in a sense of those, to deal with reforms. And there are lots of reforms that need to be made in order to deal with questions like that. And of course, there's both sides of that. And many will tell you, there are the productivity maybe can do it, but then there's also the risks of it, which exist in many ways, like particularly for having war with each other and such things. These 5 factors are going to be changing at a very, very fast rate. I think over the next 5 years, you're going to see very rapid changes in all those, and it'll be almost like going through a time warp. And when you get to the other side, I mean, think about the political questions that we're dealing with right now, the debt issues that we're dealing with right now, the Chinese-U.S. relations, and the technological impact. These, over the next 5 years, are going to be dramatic.
You took us right to it, China, because we haven't dealt with external conflict. We're talking about internal conflict, not external. You've been going to China, I think, since 1984, something like that. You know China terribly well. Give us your assessment of where we are with China, U.S.-China relations, and where China itself is right now.
Okay. U.S.-China relations are, in a number of areas, on on the brink of red lines. So, in other words, these irreconcilable differences, they're right on the brink. So if I was to take, let's say, the Taiwan issue, it's an irreconcilable issue, and so on. It's right at the line. The breaking point is if the United States said, we are in favor of the independence of Taiwan, that's the equivalent of a declaration of war. And because of our political issues that are now internally, you're going to be likely to push that because of the fact that many in Congress and so on would say we will defend Taiwan at all costs and we will give them this, and you could even cross that line. My point is it's right at the edge. That's that. We have a chips issue, and we have a technology and sanctions issue. The reason in World War II, war with Japan, you had the cutting off of the oil and then the sanctioning them taking their payments. So you have a somewhat similar situation. Chips is like oil back then, and it's a very, very, very delicate issue. You have the geopolitical issue, which also is manifest in each of them and so on supporting Ukraine, and other geopolitical issues which are also right at the edge. Neither country wants to go to war. Everybody's afraid of what that war would be like because it would be devastating economically and politically. So you will see sort of the postponing. These issues will remain and probably intensify over the next 5 to 10 years, but they will be at that edge. So you're going to see in November, there will be in San Francisco the APAC conference, and you will see President Xi get together with President Biden. But we have a political situation and so on, that's it. In China, they are also dealing with a number of big problems. As we're dealing with our problems, they're dealing with their problems. Those problems are first the debt problem that has now been allowed to pass through into the system. Meaning, you have real estate, and real estate counts for about 70% of savings. People put their money in real estate, and about 20% of their economy. And there was a bubble, and then that's passing through, and that goes down to local governments that were living on debt and also land sales for real estate purchases. And so that's a structural issue. They need to do a debt restructuring. And a debt restructuring is a very difficult thing to do. They can do it, but it's also very politically impactful because those who are, whoever's making these decisions determines whose wealth and how they divide the pie. So you have that going on. You have a move to what President Xi calls the 100-year storm on the horizon. In other words, he believes there's a 100-year storm on the horizon. That's the sort of things that we're now talking about. And with that 100-year storm on the horizon, you have a very autocratic, in other words, if you don't behave well, you'll lose your head, and so on. And that kind of environment, which, by the way, in war periods and so on, has been what most countries have moved toward or something. And so that's having an effect on the economy. We have the U.S.-China conflict itself, which is affecting what companies do. Do I want to be in China or do I want to be in Vietnam? That's one of the things that's benefiting neutral countries. So they think, okay, the ASEAN countries, India and other places can be a beneficiary of that. Where do I want to be? But that's also hurting them. And then, of course, that we have a world economy which is relatively slow moving. That affects their exports. So they're going through a very difficult period.
So let's try to end this on a high note. Middle East, of all places. Middle East. As I understand, you have an office now in Abu Dhabi.
Yeah.
There are a lot of reports about a possible deal, seems unimaginable, of Saudi Arabia, Israel, and the United States. Don't know if that's going to happen, but it looks like it might definitely be possible. If that happened, how could that transform, certainly that region, but maybe the global economy?
Well, there's a realization there that not fighting and prosperity is better than fighting and depressions. So for very practical reasons, if you take MBS, MBZ in the UAE and so on, there's a desire to move in that direction, dealing with the geopolitical issues. Those geopolitical issues are to some extent within the region, having to do with Palestinian and so on, and to some extent worldwide, like in a conflict. So the movement, you saw a movement, Saudi Arabia and Iran. Whoa, that's a big deal. And now you're seeing that line up in that way with Israel. So as I say, there are three things that I'm looking for, right? Do you earn more than you spend? They do. Do you have an environment in which there's internal vitality and people working together and so on? A lot of changes have been made in these places to make that really, I mean, it's a vibrant place. These places are talent magnets. They're competing for talent and they're getting talent because of that environment. And are you in risk of one side or another of the war, or can you stay neutral? Because the neutral countries do better. So that's what they're benefiting on. Those countries are, they're doing very well. And there will be places in the world, India, ASEAN countries and so on, which will do very well while all of this is going on.
Last question, Ray. What comes next for Ray Dalio? There was speculation about going back to Bridgewater, which you've
denied.
That is you said it was not going to happen. But,
wrong. But by the way, don't trust the media. I mean,
I'll attest to that. I've been here for a long time. Okay, I'm with that. But are you interested in creating your own fund other than that?
No. I'm not creating my own fund. Okay, I am. I have a family office that manages family and foundation funds. Okay, and I'm doing that. And but what comes next? I'm at a phase in my life where it's very natural. I'm 74 years old, and the most important thing for me is to pass along everything, okay? To pass along some of the knowledge and principles that I've learned over a period of time, which is why I'm doing this, why I'm writing the books and so on, and to pass along the wealth, and to pass along other things, and pass along Bridgewater. What a joy it's been to start it out of this 2-bedroom apartment, and 47 years later, to build this extended family and these wonderful people who are very, very capable, you know them, and to have them, this next generation, flourish and be a bit of a mentor to them. What a joy that is. And so my objective is to do that. My son gave me a book by Joseph Campbell called Hero of a Thousand Faces. He says there's a life arc. And there's a part in your life journey when there are 3 phases in life. There's the first phase where you're learning and you're dependent on others. Kids, they go to school and so on. Second phase of one's life is you're working and others depend on you and you're trying to be successful. And then there's a transition to your third phase. And in that third transition, he described it and I instinctually feel it. There's this, what he called the passing of the boon. Now, what is the boon? I didn't know what the boon was. The boon is what you've acquired, that are the gifts that you've acquired over that period of time. So I'm now in that phase, and I'm going to put out one more book, Economic and Investment Principles, and then I'm going to be done with that phase. And so that's where I am. I'm savoring life with, my family, the things I like to do, and that's where I am.
Well, thank you for sharing some of the boon with us today, Ray. Thank you so much. Great to be with you. It's Ray Dalio.
All right. That was Bloomberg Television's David Westing having a fireside chat with Bridgewater's Ray Dalio. They were speaking at the Greenwich Economic Forum today. Mr. Dalio talking about all things markets, finance, economics, geopolitics, a wide range of topics. It is Molly Smith sitting in for Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. Let's get a reset here. We'll check in with John Tucker for a Bloomberg Business Flash.
Lots of red on the screen, we can tell you that. Investors, among other things, digesting the unexpected rise in job openings in the month of August. The number of available positions increasing to 9.61 million. Yields are stretched to multi-year highs, and that's pressuring stocks today. You have 10 of the 11 major industry groups in the S&P 500. They are lower. Robert Tipp at PGIM sees high yields from the Federal Reserve in the bond market as a return to something that's actually historically normal.
They are looking at the data, and the data is telling them that, 4 is the center of the range, and they need to have policy a little bit at the restricted end of the range until they get inflation down. this is the end of the financial crisis, the end of the peripheral crisis, and return to more normal level of bond yields.
Right now, the S&P 500, 46 points lower at 42.41 on the index. The Dow Jones Industrial Average is 307 points lower at 33,124. The NASDAQ 100, 191 points lower. 2-year yield up 2 basis points. That's at 512. The 10-year at 473. That's 5 basis points higher. Also keeping an eye on the Japanese yen. It's right now at 140.93. It's earlier this morning it was above 150, taking 150 yen to buy $1 is how you can look at that. So that's putting pressure on the Bank of Japan to possibly intervene at some point in the markets. And then taking a look at shares of McCormick, the spice maker, reporting net sales that trailed the average analyst estimate. Shares down today close to 11%. I actually was cooking chicken the other day and had to go into the cabinet, spice that thing up.
Yeah, how'd it go?
I wonder, how long do McCormick spices?
Forever.
Really?
I don't know.
Because I put it on the I hadn't been in the spice cabinet in at least a decade.
Oh, that's
by
not
my count.
See, John, this is what I was telling you, that I think there's more than one explanation here for why the chicken did not come out so great. I don't know if it's the spices. That's all I'm saying.
I think so.
I'm just saying, there's
insulted.
it's science. There's more. There's another reason out there.
All right, John Tucker, thank you so much. We appreciate that. Bloomberg Markets today brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Good morning, Molly.
Good morning, Paul.
It's good to have you back. Last time we were chatting about U.S. Open tennis, but there's always a tournament going on somewhere.
There always is, yes. Right now, for those of you in Beijing, good evening. Very jealous of the contest between Alcaraz and Sinner going on right now. So
yeah,
we're always keeping an eye on these things, Paul.
Good stuff. All right, let's keep an eye on the market here, as John was just reporting, kind of a red day on the screen here. The S&P off 1%. And to me, the question is, where do you go here if this Fed is going to keep it higher for longer? Let's check in with our next guest. He's probably got an informed opinion. David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. David, thanks for joining us again here. I'm a little concerned here that at the very least, this stock market is range-bound until we get a better sense of what this Federal Reserve is going to do here.
Well, it could be worse than range-bound, as we saw in September, where it was the worst month of the year for many sectors of the market, including the S&P 500. If this 10-year Treasury yield keeps rising, that just puts pressure on all assets, whether that be real estate, whether that be stocks, whether that be tech stocks or utility stocks and so forth, because it reduces that present value. The question is, what is ultimately going to break the rise in this interest rates? And we're just not sure, but we're looking at inflation, we're looking at the Federal Reserve, we're looking at the amount of debt being issued by our federal government. We're wondering what central banks overseas are doing with their catch of U.S. Treasury securities. That's all in the mix.
And looking at some of these long-term yields here, I mean, the 30-year just on an absolute tear today. Anything really that's standing out to you in that part of the curve right now?
Well, certainly uncertainty. We just got a piece of information today, the so-called JOLT survey, which showed there were more job openings than were expected. And that's really anathema to bond prices and it's going to create higher yields because one of the concerns of the bond market is if this economy stays strong, and one of the most important parts of it is labor, then there's going to be more demand for borrowing, there's going to be more inflation, there's going to be an increasingly hawkish Fed. So that has helped push yields up again today, and of course we're seeing the fallout in the market.
You know, I was taking a look into the JOLTS report a little bit further here, and I'm not sure how much of it you've seen, but most of this rise in job openings came pretty much exclusively from professional and business services and finance and insurance jobs. That was more or less the bulk of the jump in openings here. How much do you think the Fed reads into something like that? And of course, there is the bigger picture. The labor market is still very strong. There still are a lot of job openings, but just looking at this one report here, seeing as it was so concentrated.
Yeah, so absolutely. Well, I do think that these are the types of jobs that pay a little bit better as opposed to the service sector. So there's a couple of things you could read into it. One is that this initial surge in service sector jobs post-pandemic is starting to ease. Maybe that's reflective of middle and lower income Americans having to pull in their belts just a little bit as interest rates go up and inflation bites. And of course, the other thing, if these higher paying jobs are the ones that are still most in demand, those ultimately pay a little bit more, and that could exacerbate inflation. So you could make the case that this is not the best mix from the point of view of the Federal Reserve.
Valuation, David, I guess there's a couple ways to look at valuation here. A, the market's pretty pricey given where rates are, but if you back out the Magnificent Seven, maybe it's not as bad. How do you think about valuation as we gear up for another round of earnings?
Yeah, absolutely. It is a tale of two markets and so many different metrics. And Paul, you're right to focus on valuation, because now after the September and indeed the last 2 months of Q3, plus of course Monday's mixed outing, if you strip out that Magnificent Seven, you've got a PE on the market that's only 15. That's actually below what the average has been over the last decade. But you are also right to point to, you need to always compare these things versus the yields available on benchmark treasuries, of course. And, so people are going to say, well, gee, if I can get 4.7% risk-free from a treasury, admittedly with no growth of that income, that looks pretty good, even relative to a 15 PE on the market, particularly given the risk of recession and increasingly hawkish Fed. So valuations look better. That's reasons for optimism, but we're still looking over our shoulder at the bond market.
David, I'm an economy person, and I was personally banking on this week being fairly quiet, expecting there to be no JOLTS report, no jobs report, but no such thing. We got a deal, and the government is, the lights are on for now. So looking ahead a little bit to Friday, what are you thinking ahead of the jobs report?
Well, so it seems like the consensus on Wall Street is maybe some job creation, maybe 100,000. And so we're going to be determining whether, the actual jobs created are less or more. Unfortunately, we're in this situation here, Molly, where good news is taken as bad news because, a better economy means potentially higher yields, which is going to cause people to rotate out of stocks into these bonds. And so I think from Wall Street's perspective, you may want something under 100. Certainly, if you're a bond investor, you want something well less than 100, and that could help us get, our feet back on the ground, and of course, give some pause to the Fed, who keeps talking about higher for longer. If that job creation comes in softer, that's something to watch. Of course, two other things to watch. One is, the weekly pay, is that showing inflationary trends or backing off a little bit? And of course, do they change the numbers for past months? If they revise them down, that could be a positive. The so-called bad news is good news for stocks, or it could go the other way.
Corporate earnings start up in a week to 10 days here yet again. What are you looking for in this earnings? Have we seen the worst of this earnings cycle, or do we still have some more pain to go here in Q3?
Well, we are going to see some pain because the latest FactSet pronouncements show that on average we should just be a little bit below the flat line, which is going to reflect the third or fourth quarter in a row of negative year-over-year earnings. Well, you buy stocks for earnings. If they're not making more money than they were the prior year, well, what's the point? Well, the point's going to be that forecasters are looking for a close to 12% jump in earnings in 2024, and you buy a stock not for the past quarter's earnings, but for the upcoming earnings. So, all eyes are really going to be focused not necessarily on what they report, but what they say about conditions going forward. If they're upbeat and constructive, that's a reason to jump back in. If not, people may want to hold their power, and that could be a more slogging that we're going to have to do in the market here.
Tell us where you're at, David, for looking into the November FOMC at this point and expectations for.
Problem. They don't want to say that they're done and then have to come back in again. But on the other hand, these interest rate hikes act with a long and variable lag. I'm still looking at this residential real estate market where mortgage rates have more than doubled. All things being equal, that means carrying costs have doubled. How can residential real estate prices stay where they are? And that's consumers' biggest asset. So I think that there's a lot of reasons for caution on the part of the Federal Reserve. And so my best guess is they sit tight, but they say they're going to stay vigilant. But we'll see.
All right, David, thanks so much for joining us. We always appreciate getting your thoughts. David Dietz, Managing Principal and Senior Portfolio Strategist at PPEC, Private Wealth Management. Some economic data today, and we're going to get a lot more this week because, as Molly, you just pointed out to me, I was wondering where you're going with that. The government's open, so we are going to get that data.
I know. I was thinking I was going to have a really quiet week here, but joke's on me.
So, I mean, Mike McKee, he had the whole week planned out, a little golf, maybe a little vacation, maybe check out the foliage up in New England, but no, he is in the office. Michael McKee, he covers all the economics for Bloomberg TV and radio. So I guess there's still job openings, Mike? I don't understand. This number should be 4 or 5 million. It comes in at 9.6.
Yeah, it tells the Fed, I guess, that labor markets are still tight, unless you want to contribute to the people who have more than one job, Paul, and take up one of the openings. A lot of openings in business services, which is interesting because that's been a category that you normally look at to see growth in jobs ahead of growth in jobs as a sort of a leading indicator, because companies tend to hire people on a temporary basis first till they can be sure they need them. And so it looks like at this point there's demand for that has not been filled. Now, we know that the JOLTS report has a low response rate and statistically isn't as accurate as some of the other things. So I wouldn't necessarily take the 9,610,000 as an exact number, but the trend, it does tell you something, and it tells the Fed that the labor market seems to still be in good shape, even with interest rates where they are.
Yeah, this is a story, speaks to a story that I recently did for Bloomberg News on the print side. We were looking at ghost job openings, and these are postings that are fake, that employers don't actually intend to fill, and looking at how JOLTS data are different from online job postings out there. So that was another critique a little bit of like looking into, is this just noise here in the data? And you bring up a good point here, Mike, about the concentration in professional business services, finance, and insurance. I also saw that the ratio of openings to unemployed people still at 1.5. How much does the Fed then take away from this particular report, seeing as like that ratio has been so zoomed in on?
Yeah, I mean, first of all, they look at it as it's sort of old news because this is August data.
Sure.
But it does tell them that going into August or going into September, at least before the last Fed meeting, that the labor market was still very tight. Quits did not change, still 2.3%. So people still have some confidence they can quit and get another job. One analyst I saw was noting that some of the tighter areas that we had seen in terms of job openings, like leisure and hospitality, had started to fill. And so now we're getting into a little bit more of the white-collar jobs, and it's an unusual situation because they usually would fill up first, and we saw a lot of relief in that area when the economy reopened. So where are these jobs coming from, or where are these people not coming from to fill them, unless you do believe in poltergeists?
So, I mean, it's a busy week here. ISM stuff. I mean, what are you going to be focusing on? I'm just looking at my eco screen. Very crowded this week.
Yeah. Well, we're definitely going to look at the jobs report as the number one number this week. It tells the Fed kind of where the economy is and where half of their dual mandate is, and it doesn't seem like from what we've seen so far that we're going to see a significant slowing in hiring. We'll see what ADP has to say tomorrow. They don't have a very tight relationship anymore with the payrolls numbers, but the ISM manufacturing number came in above 50, which was interesting news. We'll get ISM services tomorrow and see if the same thing is happening.
Right.
And then we'll see on Friday.
All right. All we know is you're in this week after, we thought we might have a data light week, but the government's working, lo and behold. Michael McKee, thank you so much for joining us. Michael McKee does all the economics for Bloomberg Radio and TV. S&P 500 off now 1.3% on the day, plumbing some intraday lows. We're going to have more coming up. This is Bloomberg. We're going to get some company news right now with Lisa Mateo.
Thanks, Paul. Shares of Point Biopharma Global are soaring. Right now, they're up about 85%. And this after news that Eli Lilly has agreed to buy the company in a deal valued at $1.4 billion. Now, that move will help the company expand its oncology capabilities. Bloomberg's Simone Foxman has the details.
Eli Lilly will pay $12.50 a share. That's 87% higher than Point's Monday closing price. And this deal is expected to close by the end of this year. Now, Point develops radiation therapies for cancers. In specific, a prostate cancer drug is in a late-stage trial. We should get the results out by the end of this year, and that could lead to regulatory approval.
Now, I told you about Point shares. We'll check in with Eli Lilly shares right now. They're taking a hit. They're down about 2.5%. Spice maker McCormick reported revenue that missed forecasts. Bloomberg's Katie Greifeld explains why.
It's the Asia-Pacific region that was particularly weak. Of course, the company pointing to that slower than expected recovery in China. And in fact, CEO Brendan Foley, he said that the quarterly results were largely in line with expectations if you look across regions, but APAC specifically, sales for the consumer segment in the third quarter declined 16% from last year. You can see that disappointment in the shares.
And those shares right now down about 9%. Macy's wants to expand outside of traditional malls and into smaller locations. The retailer will open 30 new small format stores by the fall of 2025. They're about a fifth of the size of a typical mall-based store. And Macy's already operates a few of them, which they say have shown positive same-store sales growth. Shares right now down about 1%. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets on Bloomberg Radio.
All right, Molly Smith, Paul Sweeney live here in the Bloomberg Interactive Broker Studio. Looking at these markets here, a tough day in the markets. S&P 500 off 1.3%, NASDAQ off 1.6%. On the yield front, 10-year Treasury up 7 basis points, 4.75% on your 10-year Treasury. The 2 years up about 2.5 basis points, 5.13%. WTI crude oil pretty steady here, just under $90 per barrel. With our news in New York City, here's Michael Barr.
Paul, Molly, thank you very much. After cutting a deal with Democrats and moderate Republicans to prevent a government shutdown, House Speaker Kevin McCarthy is now facing threats from members of his own party. Last night, Congressman Matt Gaetz of Florida filed a resolution to oust McCarthy. Gaetz says he feels betrayed by McCarthy, and then McCarthy responded.
At the end of the day, if you throw a speaker out that has 99% of their conference, that kept government open, and paid the troops, I think we're in a really bad place for how we're going to run Congress.
McCarthy said this morning, if you want to throw out a speaker from preventing the government shutdown, that's not a good idea. Former President Trump is reportedly expected to be in attendance today for day 2 of a civil fraud trial in New York City, where he'll once again face the judge who ruled the former president inflated his net worth by more than $2 billion by overvaluing his real estate portfolio. The trial could result in Trump being forced to give up control of his signature properties in New York. Trump's lawyers say real estate values are subjective and Trump properties are Mona Lisa properties, suggesting they're priceless. The Royal Swedish Academy of Sciences awarded the Nobel Prize in Physics to 3 scientists for their work on electrons. The Academy says they used extremely short pulses of light to study the behavior of electrons in atoms. Academy member Eva Olsen.
This is about attosecond physics. The ability to generate attosecond pulses of light has opened the door on a tiny, extremely tiny timescale.
One of the 3 scientists who won is from Ohio State University. Hunter Biden pleaded not guilty in a Delaware courtroom to 3 federal firearms charges filed after a plea deal imploded. It puts the case on track toward a possible trial as the 2024 election looms. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Molly.
All right, Michael Barr, thank you so much. We appreciate that. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're also streaming live on that YouTube thing. Are you a CFA?
Oh, no.
No.
No letters after my name.
Yeah, I did the MBA thing. That was much more fun.
Oh,
and
nice.
That was kind of the thing to do back in the day.
Those are good letters to have.
Yeah, and I worked on Wall Street, and that's kind of what you just did. It wasn't even a question, really. But now CFA is really good, and a lot of folks take it. It's a great program. It's a really tough program. 3 levels of the test, so at the minimum 3 years, a ton of study time. But the pass rate for the first level of the Chartered Financial Analyst exam fell back below its historic average, a sign that test takers may still be dealing with pandemic-related disruptions that became common after the COVID-19 outbreak. So in August, 37% of candidates passed the level 1 test. I think the average is about 41% for the past decade.
Is level 1 the hardest?
I don't know.
I've heard such mixed things.
Yeah, I mean, it's level 1, level 2, level 3. It used to be, it was just offered in June.
All right.
So you would see kids just start January 1, they just, boom, they just study solid right through June, and they kind of miss their spring, and they're studying all the time. Now it's kind of offered all the time.
I think correct me if I'm wrong here, is it something like 100 hours of studying required for every hour of the test?
Oh, I don't know.
I believe it's something like the ratio like that, and the test is, I don't know, at least 3 hours long.
Yeah,
I'm sure longer than that.
Yeah, it's tough. We here at Bloomberg, we certainly support all the young folks taking the CFA, and a lot of them do in Bloomberg Intelligence in particular. We support that, kind of encourage that. So it's a great designation to earn, and it really helps you out in the business. I see in here they quoted Rob Langrick, senior head of the CFA program at the Institute. He used to work for me here at Bloomberg.
How
That was
about that?
the CFA. How cool is that? All right, we're going to have more coming up. This is Bloomberg.
Paul's like, I fired that guy. He was last.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Ira Jersey. Why? Because it's Tuesday, and we always talk with Ira, talk about rates, where this Federal Reserve is going to go. He runs all that stuff for Bloomberg Intelligence. And then we're going to speak with Aniket Ulal, head of ETF and data analytics with CFRA Research, to get a sense of where the trends are, where the money's going in that red-hot ETF space. And then also this hour, Megan Horniman, Chief Investment Officer at Verdance, is going to join us. We'll get her market call as we get ready for another earnings season. But right now, let's check in with Mr. John Tucker for Bloomberg Business Flash.
All right, stocks extending their losses today. S&P 500 hit session lows. Yields and the dollar jumped after a surprising increase in the JOLTS survey data that you're talking about before. Job openings up, led by an increase in white-collar jobs. We're looking at a 4-month high. Sure, that sounds like good news. The big headline beat, though, it's going to give pause to the notion the labor market is weakening and further pressuring yields. Those higher yields have been pressuring stocks. Right now, the S&P 500, 55 points lower, down 1.3%. We're at 42.33 on the index. Dow Jones Industrial Average, 339 points lower. That is down 1%. The NASDAQ 100, 243 points lower. That is down 1.6%. Meantime, Chris Harvey at Wells Fargo says the S&P 500 getting close right now to oversold levels.
What I think is what we're saying is 4,200, that's the technical level. We think that level holds. We have to wait for rates to kind of wash out here. There's been a lot of talk about rates, but we think you should start to see buyers showing up, especially those all-in buyers, pretty soon.
More data this week, Friday. Traders, they're going to parse the jobs report. And I have to do the yen. Earlier it weakened to 150. Right now it's kind of done a round trip. People jumped in, investors jumped in after speculation that the Bank of Japan would intervene. Right now it's back to 149.13. The way to look at this, it takes 149.13 yen to buy $1. So if you look at it that way, it's easier. As it goes up, it gets weaker.
Yeah, I'm not really good with that whole currency
well, I just
thing.
gave you the simplified
that's the way I need it.
You're
That's
now
how I
an
need
expert.
it. I need it. That's why I just look at the Bloomberg Dollar Index. If it goes up, it's good for the dollar.
Well, it's good for the dollar, but then you have to consider companies, multinational companies in the S&P 500 that sell their stuff overseas. It makes it more expensive for the people to buy the stuff.
Like
overseas.
McCormick spices?
Do they buy? Well, yeah, I guess in China, right? That's
I mean,
part of the reason that we
saw
the sell-off. So.
Yeah, not so good at it. Maybe that's why the chicken didn't come out so well. It could have been the spices, John.
I was cooking, Jess, added the McCormick spices to my chicken. It didn't help.
I thought about you last week, JT, whenever...
Because you were suffering in severe pain or something?
Tupac, whatever they were.
Oh, goodness.
If we remember back to, like...
Just met back from Greece?
Yes.
Nice.
It was great. It was a lovely time.
I was in Bayonne.
And just for the folks following the McCormick, 38% of the revenue comes from international markets. So they do sell spices everywhere.
Very good.
How about that? John Tucker, thank you so much. We appreciate that. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live as well on YouTube. So you can head over to youtube.com and search Bloomberg Radio, Bloomberg Global Markets, all that kind of good stuff here. Jess Menton joins us here because we need to figure out what's going on in the markets here. Seems like a lot of selling out there, Jess. You cover all these markets for Bloomberg News. What are you looking at?
So I'm taking actually a close look at what's happening with utility shares today. So if you take a look at this and actually pull a chart back in the terminal to the summer of 2020, you can see just the complete U-turn there in that sector, and it's basically wiped out all of those gains that it did have over the past little over 3 years there. So obviously you're seeing that particular sector getting really pressured, obviously tied to what's happening when it does come to interest rates and obviously the yield on the 10-year as well as the 2-year there. So that really getting pressured. Some individual movers, though, I know that y'all were talking about McCormick earlier. That was one that Paul and I had been talking about earlier today. That's ticker symbol MKC. Those shares are actually sliding today. So it did report net sales that did trail the average analyst estimate and a larger than expected decline in some of that product volume there. So that is definitely one of those stocks that
52-week low today as well.
Yeah, exactly. Okay. So that particular stock really getting pressured. And I know that y'all have been, I think you had Michael Casper on earlier
Bloomberg
today. So he's somebody I talk to a lot for our earnings watch columns that we have every earnings season. So we'll have more of those coming out next week because as I'm sure you were talking about him as far as the kickoff for earnings season, but JP Morgan reporting on the 13th. So that obviously is a big bank and the other ones that investors will be eyeing pretty closely. I was watching actually something in particular in the terminal, and this is actually some research that Michael Casper as well as Gina Martin Adams, who we all know at Bloomberg Intelligence, they were crunching the numbers and looking at how stocks, U.S. stocks specifically, if you're looking at the S&P 500, are the most expensive relative to bonds in 2 decades. So if you look at the S&P 500's earning yield, it's around 4.7%. So virtually on par when you are comparing that with the 10-year Treasury yield. So it's the most expensive relative to bonds since 2002. And then also, if you look at the S&P 500's earnings yield, it's actually about 6% below the Bloomberg U.S. Corporate Index. So that does imply that stocks are still at their least attractive valuations relative to corporate bonds since actually 2008. So when you're looking at that, and then the fair value model for the S&P 500 over at Bloomberg Intelligence, really what they're kind of betting on is that the economy would really need to stay somewhat resilient, but without a big reaction from the Federal Reserve in order for the S&P 500 to top its record high last reached in January of 2022. So they do have this 3-year forecast over at Bloomberg Intelligence where they are tracking that. And it's interesting, if you look at the implied forward 12-month target by sell-side analysts, so this is what Bloomberg Intelligence basically aggregates from them, they're seeing EPS rising about 8.1% for the S&P 500 over the next 12 months, while some of those consensus price targets imply some of the valuations for the index to climb close to 22 times forward earnings. But a slowdown in the economy, if you begin to look at some of that data potentially over the next year, they do feel like at BI that could temper those earnings expectations growth when their macro models that they have to just about 1.2% over the next year. So that would just mean if you're looking at the S&P 500, the fair value of that would be 43.21 on the index. So really that would show you basically the S&P 500 potentially going nowhere over the next year. But that's also where a lot of, coming into this year, as we know, Paul, we've talked so much about the sell-side analysts, and a lot of them thought the S&P 500 would end the year basically unchanged, maybe around 4,000, obviously still trading below that, trading above that level, but it'll be interesting to see as far as, because Gina's talked a lot about how for her and her analysts over at BI, they feel like it's really about earnings over the next month or so that's really going to drive things more so than Fed policy.
Interesting. I'm looking at a story that the Journal has out today. Netflix plans to raise prices after the actors end their strike. It just seems like they've got a lot of pricing power because it just seems like we'll pay kind of no matter what. Is that what we are?
The Sweeney household, right?
I think so.
Your 4 kids, are they?
Well, they're all paying their own way now.
Are they?
Afraid, yeah, they're off the dole. But there was some password sharing going on.
Yeah.
I'm suspicious of that. But
yeah.
Netflix, anyway, stock's up 30% year to date. So looks like they got some pricing power there. All right, Jess, thanks so much for joining us. Jess Madden covers all the equity markets for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. Ira Jersey joins us here. He covers all the interest rate stuff. He's our U.S. interest rate strategist for Bloomberg Intelligence based down in Princeton. Ira, we got a JOLTS data here. I mean, the labor market is still strong. We've been singing this song for a long time here. How does the Fed look at the labor market broadly defined in their decision-making process?
Yeah, so labor market obviously is one of their key components, right? So they have their price stability and full employment as their goals. So obviously they have to be pretty happy with the strength of the labor market. Of course, it creates a challenge for them because if you don't have a significant slowing of all of these jobs that are available, you could continue to see wage gains be pretty strong, and that could help drive inflation a bit higher. And I think that that's one of the challenges that the Fed has to juggle at this point is, do we want to push against, inflation potentially going up again, or, what are we going to do if the economy, doesn't slow down like our forecasts project? And I think that that's what you saw in the September SEP, and one of the reasons why the Fed is thinking maybe they won't have to cut as much as they originally thought next year.
I mean, how about if they might actually have to hike again? I think a lot of the data leading up to today was, saying that the Fed is probably done and that November is probably going to be a pause and December could likely be as well. Obviously today it's one piece of data. It's clearly not it has a bit some flaws to it. It's not the one that's the most highly regarded, but how does that calculus change maybe after today?
Yeah, so that's a good question because I think the preponderance of the data that we've seen doesn't suggest that we're rolling into a recession right now, right? So it would not be a surprise if the Federal Reserve did hike again in November, particularly if we get a decent jobs number on Friday. And on top of that, obviously, we do have another both CPI and PCE print that we're going to get later this month before that November meeting. But even if the Fed doesn't hike, like you have heard a lot of speakers like, Barr even said yesterday, Michael Barr of the Fed said yesterday, it's not how much, if we're going to hike again or not, it's really how long we're going to stay at whatever the peak is. And I agree with that. I think that that's more important than if they hike that one more time in November. So if they remain at this peak, and this is what the market's telling you. So if you look at what's happened in the Treasury market the last couple of weeks with significant bear steepening of the market, so 10-year yields going up much faster than 2-year yields or even 3-month notes, which obviously do have a higher yield because they're sensitive to the Fed funds rate. But we're now pricing out even more of the cuts that we had than the Fed did in its September SEP. So the market is thinking like, hey, the Fed might not cut at all in 2024. And I think that that's an outcome that we all have to be prepared for. And the market certainly seems to be adjusting to that possibility.
Ira, higher for longer. What does longer mean for you?
So we've been of the opinion over the last number of months that it would be there would have to be a pretty deep slowdown in economic activity and higher unemployment in order for the Fed to cut interest rates. And I think that goes right to their mandates. So ultimately, I do think that the Federal Reserve may not cut interest rates until December 2024 or maybe into 2025. And I think the market's coming around to that possibility. Now, will we re-rally if Anna Wong and the Bloomberg economics team is correct and we do get a recession in the next 3 or 4 months? Then yes, I do think that the long end in particular will rally back somewhat. But it's still going to take, I think, a lot of effort for the Federal Reserve to cut rates at this point because they're still in inflation fighting mode, and it will take them, a few quarters at least to kind of get out of that mentality that they're worried about another jump in inflation. And with the job market as tight as it is, they're not going to be, they're not going to feel like they have to start cutting rates very early to meet their second mandate, which is that full employment mandate.
You mentioned Anna Wong and our Bloomberg economics team. They've long held the view that the U.S. is going to enter a recession, possibly later this year or early into next. That's kind of almost at this point looking a bit out of consensus. So many people have flopped over to the optimism side, the soft landing calls. Where do you stand in all of that?
Yeah, so what is a recession? Do we get a slowdown or a recession? I don't think that either of those matter. I think it's the no landing scenario that people are really worried about and why bond yields have risen so much the last couple of weeks. I was on the West Coast visiting investors about 3 weeks ago, and they were very mixed. You had about half of them thinking that there was going to be a recession and we were definitely going to slow down, and then you had another group that was a little bit more skeptical. I think the people on the more skeptical side about a near-term recession are kind of winning the argument at this point, and certainly the data seems to show that. The JOLTS data was fine, but one of my favorite pieces of data we got yesterday, which is the ISM manufacturing new orders data. And that jumped from, it was at 42, which is right near recession levels just a couple of months ago. Now we're at 49, which is quite close to growth. So 50 is the cutoff between growth and decline in economic activity according to the ISM surveys. So at 49, you're basically neutral, which is not terrible, right? That doesn't suggest that we're imminently going into a recession. And I think that that's one of the many pieces of data that we've received that the market's holding its hat on right now.
So I'm looking at the 10-year Treasury, 4.76%. How high does this thing go here?
So the next, well, obviously big numbers matter a little bit, just psychologically. So 5% is a pretty big one. But 516 is the next major technical support where we have to think about, looking at it in the next larger sell-off. We haven't been at these kind of yields since before the global financial crisis. So we're kind of looking at levels from 2006, 2005 for where we're going to stop. We have fair value on just based on where all the other markets are at a little bit lower than where we are right now at around 5.7%. But right now momentum is so poor. We haven't seen complete capitulation. You look at the J.P. Morgan Treasury Investor Sentiment Survey, that's suggesting that investors are still long Treasuries and still long duration. So until you get some additional capitulation, it is very possible that we could wind up seeing more significant or more sell-offs. So are they more significant than we've recently seen? Probably not. But another 25 to 40 basis points is not impossible. But I think that is going to ultimately set up for a really interesting buying opportunity for those people who have been sitting on the sidelines and they're starting to rub their hands together and say, hey, at some point here, I'm going to be able to buy at these pretty decent levels.
All right, Ira, thanks so much, as always, for joining us. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. All right, Molly, what did tennis fans do between the end of the U.S. Open and the beginning of the Australian Open?
Yeah, it's a little bit of the off season for us. So I've been catching up on some reading. This is I always have this horrible habit of loading up my library list right when a U.S. Open starts, and then I have no time to read. So now I've been finally catching up a bit.
So when is the Australian Open typically?
It's in January, so the summer there.
Okay, so
hot.
We've got.
Very
but they
hot.
are playing in China this week as well.
They are playing in China this week. We just saw Alcaraz lose fairly handily to Yannick Sinner today.
Wow.
Yeah.
Okay.
How about that?
Interesting. So,
He's human.
He's human, okay,
Yes.
but he is a heck of a player. I did get to see him see him play at the U.S. Open. S&P 500 off 1.3%, the Nasdaq off 1.7%. So we are hitting some new intraday lows. We'll keep an eye on that. Market moves. 10-year Treasury 4.76. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Ford says it's laying off an additional 330 employees due to the ongoing United Auto Workers strike. Bloomberg's Isabel Lee has the details.
That's on top of the 600 the company already laid off from its Michigan assembly plant beginning September 15. In total, around 930 employees are impacted by the strike. And as of Thursday, estimates show that the strike had cost Ford around 8,000 vehicles.
Now, meantime, GM let go of more than 160 workers at 2 other facilities. Ford shares right now, they're down about 1.5%. General Motors down about 2.5%. Tesla is bringing back its best-selling model with a bit of a price change. Bloomberg's Gina Cervetti has that story.
Tesla has reintroduced a Model Y crossover SUV with rear-wheel drive in the U.S. after reporting third-quarter deliveries that fell short of Wall Street expectations. The starting price of the model is now just under $44,000. The company sold just over 435,000 vehicles globally in the third quarter. It will have to pick up the pace in the next 3 months to reach its guidance for 1.8 million units this year.
Tesla shares right now down nearly 2%. And Netflix may be raising the price of one of its subscriptions. The Wall Street Journal reports the streaming giant plans to increase the cost of its ad-free service a few months after the Hollywood actor strike ends. Sources say it'll happen in several markets globally, likely starting in the U.S. and Canada. Now, that news right now has Netflix shares a bit higher right now, up about 0.3%. Now, the Journal also says Disney is looking into launching a new live sports tier of Disney Plus in markets outside of the U.S. Disney shares right now down about 2%. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We have yields rising and stocks are sliding. The data, the jobs opening, rising to a 4-month high in August, led by an increase in white-collar postings. So this does suggest a labor market that is better than expected, also keeps pressure on the Fed to keep rates high for longer. The hotter than expected number driving swaps traders to also increase wagers that the Fed is going to raise rates in December. Among today's biggest equity movers, HP gaining about 2% right now. Bank of America analysts raising their rating on the PC maker to buy. The S&P 500 54 points lower. That is down 1.3% at 4233. The Dow Jones Industrial Average 358 points lower, down 1%. The Nasdaq 100 down 235 points. That is down 1.6%. The 2-year yield up 3 basis points, 5.13. The 10-year 8 basis points higher. That is at 4.76 right now. And then the long bond, the 30-year, the price. This is quite a move, down 1 and 17 seconds in price. Price down, yield up. The yield on the bond 4.89 right now. That is multi-year highs for that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Molly and Paul.
John and Molly, have either of you ever witnessed a high school surfing competition, I guess?
We didn't have that. I went to high school at the Jersey Shore, and I wish we had that, but no, we didn't have
So
that.
I'm on the beach yesterday, and I see it was a surfing competition, a match, a game, I don't know what you call it, between St. Rose High School, which is in Belmar, I think, and Wall Township High School, and they go surfing against each other. It was really cool.
How cool is that?
They were very good.
Score points. I mean,
and what happens if there's no surf that day?
Yeah, what do you do? How is the water?
I don't know. There's great waves. It's been huge surf every day since Labor Day. Not a day off. I mean, it's been these storms are turning it up. But anyway, the kids were awesome, and it was fun to watch, and they were into it. The families were into it. So,
can you get do you get a letter with like a
surfboard? I bet you do, yeah. I mean, it was big time. A lot of people there watching it, so it was fun to watch. But I'd never seen one before, so I hung out and watched a little bit of it. So that's good. All right, Molly Smith sits in here for Matt Miller. We have no idea where he is, but he's somewhere in Ohio.
He's not watching a surfing competition?
I don't know where. I don't think they do a lot of surfing in Ohio.
Oh, go figure.
Exactly. All right, Molly Smith, Paul Sweeney live here in a Bloomberg Interactive Broker studio, and we're also streaming live on YouTube. Let's talk some ETFs. I always like to know where the money's flowing there. Aniket Ulal joins us, head of ETF and data analytics with CFRA Research. Aniket, thanks so much for joining us here. I always start off, I guess, discussions with ETF folks and just say, where's the money going now? Where is the hot place for investors where they're allocating their capital in the ETF space? What are you seeing?
Well, firstly, aggregate ETF flows have been much lower than expected this year. At the beginning of the year, we were talking about maybe hitting $1 trillion in inflows. We're at just over 300 billion this year. So in aggregate, certainly flows have been lower, though, of course, 300 billion is not a bad number. I would say there are certain categories that have been interesting. On the fixed income side, we've seen, bond ETFs taken a lot of money this year. Even though bond ETFs make up only about 20% of all ETFs by count and assets, they've taken in about 40% of the flows this year. So obviously that's been a growing category. Surprisingly, it's not been just the shorter duration bonds. We've also seen investors move into longer duration, despite the fact that rates are still high and even could go up a little bit. On the equity side, we've seen a lot of flows into active ETFs. Active ETFs typically make up about 5% of all ETFs in the US, but they've actually taken in over a third of ETF flows this year. So that's where a lot of the money has been going so far, though we think there are some strategies where investors should be paying more attention, but they haven't taken in as many flows as we expected.
How about who the money is coming from? Can you tell us some of the makeup? Is it more institutional money or retail investors?
It's really a mix. I mean, typically, ETFs have a pretty healthy mix, about 50-50 between retail and institutional. Sometimes we see even the same categories, money moving into different products depending on what people care about. For example, if you look at the QQQs, there's a lower cost version that typically tends to attract more retail type investors, and the old classic QQQ, the higher expense ratio tends to attract more institutional money, but it's much more liquid. So it really depends on the category, the liquidity around it. Typically, the institutional assets will go into the more liquid ETFs, and the retail money will go into the lower cost categories.
All right, so I'm old enough to remember when ETFs were just synonymous with passive investing. That's kind of what they are. But there's this concept, or there's this part of the ETF space that's actively managed. Can you tell us about what that's all about?
Sure. So active ETFs are essentially, we define active ETFs as those ETFs that don't track an index, right? So a classic passive ETF would track an equity or bond index or a commodity price. What we've seen in the last year is, till about 3-4 years ago, active ETFs, that is non-indexed ETFs, made up about 2% of all equity, all ETFs in the US. But in the last couple of years, it's actually gone up to 5-6%. And these ETFs are essentially those ETFs where managers are making active security selections. In a lot of cases, we see big mutual fund managers entering the market, and some of them either launched new ETFs or they've converted their existing mutual funds to ETFs. I mean, the most successful in that conversion category is Dimensional. There's a huge army of advisors who like Dimensional funds, believe in their philosophy, and Dimensional has almost about 60 billion in assets that's been converted from mutual funds. Other companies that have had success in the active ETF space recently include JP Morgan with its JEPI covered call strategy, which appeal to those people who want more income in their equity allocation. And we've seen other players like Capital Group and others enter as well. So I would say the classic traditional index space that was dominated by BlackRock, Vanguard, and State Street has been shaken up quite a lot in the last couple of years.
So I've got a bit of a curveball question for you, Aniket. I've seen there can be some really fun ETF tickers out there. We've got weed for the cannabis-related one. Tell us about some of the crazier ones you've seen.
Well, there's a whole bunch. There's two types. There's the fun ones, right? Like there's MOO, there's agricultural kind of ETFs. In the past, we had JETs for like the airline industry. But the ones I actually like are the ones for the big tickers you actually want to remember. For example, EMXC, I think is a nice one, Emerging Markets ex-China, because I think that's a space that's going to get more attention, particularly with what's happening there. So, sometimes there's the fun ones, and then sometimes there's these kind of, I would say, more important ones where you actually want to remember the ticker because it may be a big part of your allocation.
Hey, Aniket, talk to us about mutual funds converting to ETFs. How big is that trend, and why do they do it?
It's a pretty big, I would say it's a significant trend. The main reason they did it is because, the fact is that the way the ETF industry has evolved, you've had three players really keep about 80% of market share, and that's Vanguard, BlackRock, and State Street. That obviously, and that in combination with the fact that you've had so many flows into ETFs, essentially was a significant threat to the traditional mutual fund providers. So the advantage of converting, there's several advantages, but I'd say the biggest advantage is the fact that you can port over your performance, right? I mean, if you have a fund that launched 20 years ago, you convert that to an ETF, you can carry over your performance record, track record, and so on. And particularly for those investors who believe in your strategy, that's actually a nice advantage. There are other, tax advantages and other things, but I'd say the main advantage is porting over. You can also bring over assets, right? So, you can essentially allows you to kind of leapfrog up the leaderboard a little bit. So I'd say being able to port over assets, port over performance, and those are some of the major factors.
Will anybody ever start a mutual fund again? It just seems like if you're going to start a fund, why would you ever start a mutual fund? Shouldn't it just be an ETF? It seems like the days of the mutual fund are maybe long gone.
It's actually interesting. We recently saw some ETF issuers actually launch a mutual fund version of their ETF. So totally unexpected. It may be kind of an exception, but mutual funds still have a place. Primarily because of retirement plans, right? Most defined contribution and even defined benefit plans may have mutual funds. a lot of times these kinds of plans don't necessarily benefit from the tax advantages of ETFs. They may already have negotiated very low fees on their mutual fund share classes. And then there's record keeping and other complications that come from the fact that ETFs are traded intraday, whereas retirement assets tend to be moved much more slowly. So there is a place for mutual funds, certainly in the long term. ETFs of the future, we've seen very clearly, especially on the equity side. Now over many years, kind of a long-term trend of flows from mutual funds to ETFs, but there's certainly a place for mutual funds in the industry.
All right, Aniket, thanks so much for joining us. Appreciate getting some of your time. Aniket Ulal, he is head of ETF and data analytics with CFRA Research, talking about the ETF business. It's been one of the most amazing, I think, growth stories in financial services over the last 20, 30 years has been the growth of ETFs. They're just everywhere, and that's where all the money's going, and boy, there's a million different varieties out there.
And a fun ticker like Moo. Why wouldn't you want to get into that?
Exactly, and CALS is my favorite for cash cows. It's a ETF that invests in good free cash flow companies.
Oh,
so
we love
cash
that.
cows. Yeah, so it's lots of good stuff out there. S&P 500 off 1.5%. NASDAQ off 1.8%. Lots of selling pressure out there. With our news in New York City, here's Michael Barr.
Paul, Molly, thank you very much. House Speaker Kevin McCarthy is facing a threat from fellow Republican Representative Matt Gaetz. Gaetz, a far-right Republican from Florida, rose in the chamber as the House was almost done for the day to file the motion to oust McCarthy as Speaker. Gaetz says he has the votes.
Well, I'm not so pessimistic as to immediately accept that it'll fail. I think that's the likely outcome. But, this won't be the only time.
McCarthy responded on social media, "Bring it on." Donald Trump is in a New York City courtroom for a second day in his civil trial to determine damages in a fraud case against him. A New York Supreme Court justice found the former president guilty of fraud last week after an investigation into his businesses found he overstated the value of his assets to illegally obtain financing and more. Trump claims the fraud case is interference in the 2024 election.
There's no case here. There's no victim. The banks aren't a victim. The insurance companies are a victim. Everybody got paid. It's a terrible, terrible thing. This was for politics.
His son Eric told Fox the trial is designed to keep his father off the campaign trail. An American among three winners of this year's Nobel Physics Prize. It was awarded for work examining electrons and atoms during the tiniest of split seconds. Hans Ellegren in Stockholm with the announcement.
The Royal Swedish Academy of Sciences has decided to award the 2023 Nobel Prize in Physics in equal shares to Pierre Agostini, the Ohio State University,
and two fellow scientists from Germany and Sweden. A Texas congressman says a group of men carjacked him at gunpoint in Washington, D.C. last night. Democratic Texas Representative Henry Cuellar told police a group of men held guns to his head. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Lots of red on the screen. Job openings unexpectedly increasing in the month of August. That's the data we got this morning. That's increased bets the Fed's work isn't done. Rates are higher, and then the risk assets, they are sinking. All the major stock averages are down more than 1%. All 11 of the major industry groups in the S&P 500 in the red right now. And Andrew Sheets at Morgan Stanley says stocks will remain under pressure because there are pretty clear alternatives for investors.
The fact that safe assets yield so much that you can get 5.5% on a treasury bill, you can buy treasuries that yield more than 2.2% over inflation for the next 10 years. These are pretty compelling competing assets that equities have to go up against.
Eli Lilly, they're going to pay $1.4 billion to acquire Point Biopharma Global to gain radiation therapies. Shares of Point Biopharma are up right now 85%. And then news about Johnson & Johnson, New Jersey-based Johnson & Johnson, persuading an appeals court to throw out a more than $223 million jury award to a group of ex-baby powder users. They blame their cancers on asbestos in a talc-based version of the product. Again, S&P 500, 60 points lower, down 1.4%, 42.27 on the index. The Dow Jones Industrial Average, 408 points lower. That's down 1.2%. The NASDAQ 100, 247 points lower. That's down about 1.7%. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That is your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you so much. We appreciate that. Bloomberg Markets today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's go to our next guest, because I'm looking at this market, and we had the job market, the job openings, the JOLTS thing, Majiggy, that came in really strong, higher than any forecast out there. So, of course, the market says, well, the Fed's not going to be cutting rates anytime soon, and maybe even raise rates. So let's check in with Megan Horniman. She's a Chief Investment Officer at Verdance. Megan, what'd you make of the JOLTS data we saw this morning and the market's reaction to it?
So yeah, it is 1 month. We have to remember that. It has been consistently coming down. It was surprising to us. I mean, it was very concentrated in some of the white-collar jobs in finance, business, education. It's going to be more important on how that translates into Friday's number, if it does at all. The one thing we took out of that report is the quits rate. So that's the amount of people that are voluntarily leaving their job, and that still is very low. So that shows that there isn't a ton of confidence in the future of the labor market. People are holding on to their current jobs. Let's just see what happens on Friday. We've already been in the camp that there's more of a chance the Fed will have to raise rates at least one more time this year. Whether it's November or December really will depend on the data that's coming in. Right now, we do see the labor market in its entirety is still relatively strong. So the Fed can't necessarily pull back what they're doing. The other thing that has concerned us has been the fact that oil prices are back on the rise. So that's going to cause some volatility in the inflation data and make the job for the Fed even more difficult.
You also mentioned in the JOLTS report, there's layoffs also stayed low in addition to quits. And looking ahead then to Friday with the jobs report, I mean, where do you see the weakness coming from? It looks like people have been calling for the hiring to be slowing, and it is slowing. But I don't know, some of these estimates in here for like 100,000 down from 187, that would be a huge drop off.
Mm-hmm. I mean, as far as weakness in the labor market, let's remember that the labor market is a lagging indicator. So a lot of people put so much, kind of credence into every month's jobs report and the fact that it's strong and the Fed's going to have to do so much more. Let's just remember, it's a lagging indicator. It is what's kept the economy afloat for this entire year. But going forward, there are some cracks that are starting to emerge. When you look at some of the underlying indicators and some of the indexes in manufacturing or even the service side. This is showing weakness. We know that from the construction side, there's weakness there with the housing market being in such disarray. So I don't necessarily think that, you know, from the weakness in the labor market will continue to materialize. It's just not going to materialize immediately. Also, we do, in reality, have a structural issue with the labor market right now. We have some demographics that are concerning. But I do think if you look over a long period of time, so I'm not talking about this month or next month, there are other things that we have to remember, like AI. This will come in and also help with some of the structural issues in the labor market. I just think it's going to make the Fed's job very difficult, and they're going to have to tread very lightly with this. Unfortunately, it looks like they're going to push the economy into a recession. A needed recession. There are some excesses that need to be cleared out, but unfortunately, with the amount of tightening that they're doing and that they need to do, it's likely pushing the economy into a recession.
Oh boy. All right. So I had taken recession off the table, Megan, 3 months ago. So we'll have to see how that plays out. But I trust your opinion a lot more than mine. Looking at the S&P 500, Megan, you know, we're still up 10% for the year, but, you know, down 8% or so from that, I guess, that high back in July or so. Has the market adequately priced in higher for longer, or do we have more to go, or are we going to tread water? How do you kind of view the next 3 to 6 months?
I still don't think it's completely over. I think a lot of it has been done, the damage. We've seen this has been a pretty rapid move. I just don't think from a valuation perspective, there's two things. I think PE multiples still are a little too high, given the higher for longer. And I also don't think, I know you mentioned you took recession off the table 3 months ago. We've kind of always been in the camp that there'd be a recession, but now there's more people coming back into the camp that unfortunately this will end in a recession, whether it's a short and shallow recession, but some sort of a recession. The earnings expectations for next year aren't really reflecting that yet. So I'm afraid that we're going to see earnings expectations come down lower for next year. So that could put some more downward pressure on the market.
Yeah, there's still so much division within the Fed right now of where do we go from here. And, you know, I want to ask, Megan, maybe you've got a better idea than they do right now of what the data is telling you in terms of the direction of rates right now. You think another hike may be possible this year?
Yeah, and I won't say I'm smarter than anybody at the Fed, but I will say that I think it is good to have some of the division there in the committee because we are walking such a fine line. Inflation is extraordinarily easy to reignite, especially if you start to give the signs that, hey, we are done, rate hikes are done, because then eventually people are going to be looking for that rate cut. What my concern is that rate cut isn't going to happen anytime soon because they're walking such a fine line with inflation. With the PCE core, we did just get below 4% on a year-over-year basis. That's good. Inflation is going in the right direction, but there are some other factors that we're concerned will just cause a lot of volatility in inflation and make us getting from that 4 or 5% inflation down to 2% much more difficult.
WTI crude oil back around $90 a barrel. Is there still an energy trade here for investors, or has that kind of played out?
I think if you're just looking at from a return perspective, a lot of it has been priced into the market. We think it's definitely an issue from the inflation standpoint, but it's also something that can really hurt the consumer. Sometimes the cure for high prices is high prices, and energy is one of those things. If this causes demand to pull back substantially for the economy to fall into recession, commodities, including oil, they can't escape that weakness when we do fall into an economic contraction.
All right, Megan, thank you so much for joining us again. Always appreciate getting your thoughts. Megan Horniman, Chief Investment Officer at Verdance, talking about these markets. So when I think about energy, I usually just ask John Tucker, but he's not here, but what he pays for gas, because he drives like 500 miles a day. $3, let's call it 80 cents a barrel for unleaded gasoline.
Yeah,
so
that's what the AAA gas price is looking like right now. It's come down a bit.
It's come down a little bit.
Yeah, I mean, they were talking like the highs about a couple weeks ago was like closer to $3.90. So yeah, I mean, 380 relatively sounds a little nicer.
It's better than 5, and John Tucker says 4 is a big psychological threshold for him. But
how about 6 in California?
Oh yeah, all those taxes. Yeah, it's crazy. S&P 500. That's enough. That's where we're focusing right now. That's off 1.5%, near the day's lows. Nasdaq off 1.8%. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Shares of HP are higher after Bank of America upgraded the company from underperform to buy, and this ahead of its analyst day. Bloomberg's Abigail Doolittle explains.
They are basically seeing these catalysts, that idea that the PC market is bottoming out and that the cost cuts could support stable margins and that there could even be some EPS upside from buybacks. It's interesting they're dealing with the weakness because this stock down about 25% since the July peak. Not so dissimilar from other stocks. It is down 7 weeks in a row, so a little bit more of a losing streak than some of the other technology companies out there.
Shares right now up more than 1.5%. Another airline has found faulty parts on its jets. Bloomberg's Steve Potisk has that story.
Delta is the 4th major airline to find unapproved parts on some of its planes. It doesn't say exactly how many jets are affected, only that the engines account for less than 1% of the more than 2,100 power plants on its mainline fleet. Like American, United, and Southwest Airlines, Delta says the bogus parts came from London-based supplier AOG Technics.
Delta shares right now, they are down more than 2.5%. And sources tell Bloomberg that United Airlines is nearing a deal to buy a double-digit number of Airbus SE A321 narrow-body jets. Now, the carrier already has 120 of the planes on backlog. After industry discounts, airlines usually pay about $60 million for each new jet. United has been loading up on Airbus narrow-body as it retires its aging Boeing 757s. Now, the carrier has also ordered Boeing's rival 737 MAX model. United shares right now down nearly 2%. Those are the company stories we're following. I'm Lisa Mateo.
This is Bloomberg Markets on Bloomberg Radio.
All right, looking at these markets here, the S&P 500 off 1.5%, the NASDAQ off 1.8%. That's 245 points on the NASDAQ, down to 13,062. 10-year Treasury yields surging. It's called 11 basis points, 4.78% on your 10-year. 2-year a little bit less, so we got a little disinversion of the yield curve. That's up about 4 basis points, 5.14% for your 2-year Treasury. And again, WTI crude oil to the high side, again up 1.3%, right around $90 per share. So we got a lot going on out there. We'll keep you in tune with our news in New York City. Here's Michael Barr.
Paul, Molly, thank you very much. Speaker Kevin McCarthy is facing an extraordinary referendum on his leadership of the House after fellow Republican Representative Matt Gaetz, a longtime critic, moved to launch a vote to oust him from the helm. McCarthy is standing by his decision last weekend to collaborate with Democrats on a stopgap plan to keep the government open.
I firmly believe it's the right decision to keep government open, to make sure our military is still paid, our border agents are still paid. And if that makes a challenge based upon whether I should be Speaker, I'll take that fight.
A vote is said to come today. President Biden's son pleads not guilty to 3 federal firearms charges. Bloomberg's Steve Rappaport has the story.
Hunter Biden's plea comes after a deal to resolve tax and firearm charges fell apart when a judge refused to accept the terms of the agreement. The president's son is accused of lying about his drug use on a form to buy a gun in 2018. Hunter has acknowledged he struggled with an addiction to crack cocaine, but his attorneys say he didn't break the law. They also suggested the prosecution of Hunter Biden is the result of pressure from Republicans who thought Hunter got a sweetheart deal. Steve Rappaport, Bloomberg Radio.
Former President Trump is back in a New York City courtroom today for day 2 of his civil trial. He's being tried for fraud, where prosecutors say he inflated the value of certain assets to get favorable loans and avert paying some taxes. Trump called it a witch hunt.
This was for politics. Now, it has been very successful for them because they took me off the campaign trail, because I've been sitting in a courthouse all day long.
Trump does not have to actually attend the trial until he's called as a witness weeks from now. Sam Bankman-Fried, the former head of the now-defunct crypto firm FTX, is in court today as jury selection begins in the federal fraud trial against him in New York. Federal prosecutors accused Bankman-Fried of running one of the largest financial schemes in U.S. history, allegedly using FTX's customer money to pay back loans and buy real estate. He could face more than 100 years in prison if convicted. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Molly.
All right, Michael Barr, thank you so much. We appreciate that as always. So, Molly, what's going on in the world of coffee?
So this is an interesting story that I just came across on the Bloomberg terminal. The headline here, coffee seen rising as Bourse bars old beans from stockpiles.
Bourse bars old beans from stockpiles. All right.
So it looks like what's happening here, and again, this is just from my cursory glance of this story, but I don't know, I think a lot of you people may care about this. This relates to if you're a Starbucks drinker, you might want to listen up here. So it sounds like there's this little tweak here by Intercontinental Exchange, so that's where coffee futures are traded.
Okay.
That involves the certification process for beans and how long these beans can be. There's a so-called age penalty. So it sounds like basically you need to have newer, fresher coffee beans that are that are in these warehouses here, and that's going to make coffee potentially more expensive.
They're saying, bottom line, it is a bullish update, said John Goodwin, a senior commodity analyst at research firm Arrowstream Inc., saying the price could rise in the short term and then return to normal or could stay elevated for longer. It's kind of uncharted territory. So the coffee is held in exchange warehouses where after some time, sellers face an age penalty to prevent lengthy storage. To counter that, some sellers were resubmitting old stock back into the process, a move that hides the true age of the coffee. Who knew that there's some shenanigans going on in the coffee business? But Bloomberg's on top of it. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Kaylee Lyons of Bloomberg Television. She's down in the Manhattan courthouse. Sam Bankman-Fried, his trial begins today, so she'll have the latest reporting there. I think they are looking for some jurors there. Plus, Josh Joseph, CEO of Big Plan Holdings, discusses the outlook for the cannabis industry. And then we're going to check in with Natalie Trevithick, head of investment-grade credit strategy at Payden & Regal, and see where there's some opportunities in the credit markets out there, if, in fact, we are higher for longer with this Federal Reserve. Let's kick things off, as we do in this hour, with Charlie Pellet.
Thank you very much, Paul Sweeney. Lots of moving parts. We are looking at a down market today with the Dow, the S&P, and NASDAQ all declining. In fact, right now, we are very close to session lows on the S&P 500 index. Right to the numbers, with the S&P now down 59 points at 42.29. That is a drop of 1.4%. The Dow is down 394, lower by 1.2%. The NASDAQ Composite Index down 223 points. For NASDAQ, that's a decline of 1.67%. 10-year yield, 4.77% now on the 10-year, with the 2-year yielding 5.12%. Stocks are slumping while the retreat in treasuries gets fresh legs after jobs data this morning bolstered the case for the Fed to keep interest rates elevated. Spot gold down $2.50 the ounce to $18.25, a drop there of 0.1%. West Texas Intermediate crude up 1.4%, 90.03 for a barrel of WTI. And the yen depreciated past the psychological support level of 150 against the dollar, putting traders on watch for possible intervention by Japan to prop up the currency. So a down day for U.S. equity markets. One of the big questions for investors is the strength of the consumer and whether that strength can continue into the fourth quarter. Jack Ablin is Chief Investment Officer at Crescent Capital, and on surveillance this morning with our Paul Sweeney, he told us he is starting to see cracks in the consumer.
I do think that with excess savings down, with some of this federal loan debt out there, we're already starting to see trends, spending trends in foreign travel, for example, which I kind of view the ultimate discretionary item, starting to taper off a little bit.
And you can hear more on that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. And Macy's is going to be opening 30 new small format stores by the fall of 2025 as it works to expand its presence outside of traditional malls. Macy's shares down 1.1% today. Among some other department store retailers, we've got Target up by 0.9%. Kohl's down 1.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you very much, Charlie Pellet. We appreciate that. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. Tough day out there in the markets, as Charlie was just reporting. Lots of red out there. Let's see where we get some action on some of the individual names. We'll check in with Bailey Lipschultz. He covers all the markets for Bloomberg News.
Yeah, Paul, the vibes, as the kids would say, are off. All three major averages down more than 1.3%. The Dow erasing gains for the year. This coming after yesterday, we saw the Russell 2000 erase gains for the year. The equal-weighted S&P tracker erasing gains as well. So a lot of weakness. The worst performer in the S&P 500 through the afternoon session is McCormick, the spice maker, plunging as much as 11%, the biggest drop since March 2020 when things were also in a much different environment.
Man, if only John Tucker was back here today. We were talking about, this chicken he was cooking, and he's faulting the spices. So I don't know, McCormick today just really taking a beating from all angles. But another stock not doing so well today, Bailey, WeWork, skipping an interest payment, not so good.
Oh. Yeah, stock dropping 25%, lowest price on record. This is a de-SPAC, beleaguered company, struggled to go public via regular way IPO, has warned of bankruptcy issues and substantial doubts about its ability to continue as a going concern. So as you mentioned, skipping that payment, trying to rework things to keep the lights on. And this is a company that, again, if you look back before it went public, was kind of the darling of investors. SoftBank had plunged tens of billions of dollars into this company. And right now, after a few reverse splits trading around $2, if you take it on a regular basis, pre-split was technically worth or trading at $548. So a huge sell-off for the company as it
$548 a share?
Yeah. Well, that's pre-split. You know, when you do a reverse split and keep bumping up that number, it kind of.
I'm looking at 231 on the screen right now, and that's as in $2.31.
Yes, exactly.
So quite a precipitous drop.
All right, so what's the market we're seeing here selling off here? It's been a weak September, really bad September. Looks like it's continuing into October. That's not good for the new issue market, is it?
No, not at all. And I mean, Paul, one of the things that bankers keep an eye on is the VIX. We saw it pop back above 20 for the first time since May. So one thing to keep an eye on. Obviously, all eyes will be on Birkenstock, expectations for it to price its IPO on Tuesday and debut Wednesday next week. But when you talk to bankers, you talk to investors, it does seem like maybe we're going to see more companies kicking the can down the road, as maybe 2024 will be the time to test the waters, just given the uncertainty from a macroeconomic standpoint. Will the Fed hike? Won't they hike? And kind of all those recession clouds, for lack of a better term.
You had also mentioned to us a couple of healthcare stocks to look out for today. What's going on with Eli Lilly and ALX Oncology?
Yeah, Eli Lilly buying Point Biopharma for $1.4 billion. This is a deal to lean more into the cancer drug-making space. Eli Lilly, obviously, you look at that stock price performance, has been tremendous on the back of Alzheimer's drugs, weight loss drugs. So really buying from a position of strength when you look at the reaction from analysts and investors. Stock's down 3.7%, but probably not necessarily company specific given the tape that we're seeing. And you mentioned ALX Oncology. This is a stock up 52% after mid-stage gastric cancer trial was successful. But this is another one of those companies, when you look at bigger picture for biotech investors, a lot of these guys are long-term investors right now trading at $7 on a basic, looking at where the stock would have traded, again, some reverse splits there, popped back above $112 back in December 2020. So a lot of people still sitting in the red for a company that's trying to advance its medicine.
What's the street saying here about these markets? I mean, one could argue that, boy, with interest rates at these levels, it's a tough environment for stocks to work.
It's hard, and I think that's the thing. When you look at where interest rates are, you look at the ability to get a return by parking your money in a markets account, for lack of a better reference. There's a lot of uncertainty, a lot of questions about whether the rally has truly been carried by AI, what we're going to see from earnings. That's why I think it's going to be a big focus, obviously, on the macroeconomic front when you see these data points and positioning from the Fed. But this is going to be a critical earnings season. We're going to see that kicking off in just a couple of weeks, and what the banks are saying, what some of these consumer-exposed companies are saying about the true strength of consumers is going to really set us up through the end of this year and into 2024, which a lot of people are going to be closely watching.
Yeah, and you mentioned also, looking at some of this macroeconomic data for stocks here. At what point do you think, we had a guest on earlier saying that so much of macro data these days, good news is bad news is good news. When does that start to change for stocks?
I don't know, Molly, because it seems like
when can we just take it at face value, Bailey? Help us out.
I miss those days because it's so much easier covering the equity markets when you see good data, meaning good moves for stocks. I think that's the big question is better kind of understanding from what the Fed is actually thinking, because we did get a bit of contrasting views of maybe not having talking down another rate hike yesterday, and obviously some more hawkish commentary coming out through the evening and into this morning. And that's really kind of been the thing, is investors trying to gauge where the Fed is going and what that's going to mean for their cost of capital.
All right, Bailey Lipschultz, thanks so much for joining us. Bailey Lipschultz, he covers all of the markets for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. Lots of stuff going on in courtrooms these days that seems to be getting a lot of attention. One of them is in Lower Manhattan, Sam Bankman-Fried. Whew. I mean, I guess jury selection starts today. This is going to be huge for the world of crypto, I think. So we have Kaylee Lyons from Bloomberg Television. She's down at the courthouse here with the latest reporting. Kaylee, it's, I guess, the first day here. What do we expect from this trial? How long will this trial be? And what is the expectation going into day one?
Well, it's going to take some time for this entire thing to play out, Paul. Could take up to 6 weeks. As you say, this really is just the first day. And the very first thing they have to establish is who will make up the jury in this case. They are in the process right now of vetting jurors. We've already seen a number of jurors dismissed. They're being asked questions like how familiar they are with crypto and whether or not they lost any money in the collapse of FTX and Alameda Research. So that's kind of the weeding out that they have to do. Then once the jury is fully formed, that's when really the meat of this trial is going to get underway. And we're going to start hearing arguments from the prosecution. That will be the first few weeks, and then the defense following up in the aftermath.
So where is Sam Bankman-Fried right now in all of this? Is he still at that, that jail that, had maybe the questionable amenities, or he's now in New York standing trial? Give us a lowdown on his movements during all this.
Well, you're right. He has been in the Metropolitan Detention Center in Brooklyn since August. Before that, he was out on bail, several $100 million of bail, I would add, at his parents' home in California. That privilege, though, was revoked by a judge in August after he basically said that he was trying to tamper with witnesses. So that's why he has been in jail. His defense team has made repeated attempts to try to get him out of jail. They've argued that it would give them easier access to him in the lead up to the trial, but repeatedly that has been shot down. So in jail is where he will stay. He will be shuttled back and forth from the detention center to this courthouse over the course of the trial. And we're all waiting to see whether or not we're actually going to hear from him personally during this trial, if he will take the stand. Usually that doesn't happen in white-collar cases, but Sam Bankman-Fried has been unusually vocal about his case really all along since all of this initially went down last November and December.
Kaylee, it seems just from the reporting I've seen that the government has a lot of evidence backing up their case. What is the primary defense argument here?
Well, the case the prosecution is making, of course, Paul, is that this was one of the largest financial frauds in U.S. history, 7 different counts of things like fraud and money laundering, and they argue that he knowingly perpetrated this, that he was knowingly commingling customer funds, using them improperly to fund his own initiatives. What Sam Bankman-Fried argues, though, is that there was no intent to commit fraud here, that he was kind of a rookie businessman accelerating really, really rapidly, and that he didn't know the extent of what was going down, which is what's going to make the witness testimony really key here. The prosecution is working with 3 individuals in particular who are some of the closest associates of Sam Bankman-Fried. Gary Wong, who co-founded FTX with him, Nishad Singh, who was FTX's head of engineering, and then Caroline Ellison, who is not only Sam Bankman-Fried's ex-girlfriend, she also was the CEO of Alameda Research, the trading firm that essentially was supposed to be operating independently from FTX, and then it seemed revealed that, in fact, they were much more integrated than anyone had previously known. So the fact that they have all pleaded guilty to federal charges, that they are cooperating with prosecutors, is really going to aid the prosecution's case, might make it a little bit harder for the defense to say that Sam Bankman-Fried had no idea what was going on.
And you mentioned that Sam Bankman-Fried wants to participate in his defense here, and I've got to feel like if I'm a criminal defense attorney, I would be telling my client to probably shut up respectfully, and I'm sure the prosecution is just eating this up then.
Yeah, this is very unusual. You don't usually see white-collar criminals reaching out to journalists, speaking publicly at events about their case and doing and saying things on the record that could then be used against you theoretically in a court of law. And yet that's exactly how Sam Bankman-Fried has been approaching this. I would note, though, that when he was at the helm of FTX before everything imploded, he did make himself really accessible to media. He was kind of everywhere. He was really one of the forefront voices of the crypto industry, not just in the media, but on Capitol Hill as well, making frequent visits to Washington to be an advocate for the crypto industry as a whole. So in many ways, Sam Bankman-Fried is just a very unusual character as he is facing down these charges.
So, Kaylee, here, it seems to me to be a very complex case here. Do we have any sense of how long this trial is? Has the judge kind of said, how long it should be?
Our understanding is that it could take up to 6 weeks, that there could be multiple weeks of the prosecution making their case and then a couple weeks after that of the defense making theirs. So this is going to be lengthy. Of course, there is the possibility, though no one is expecting it at this point, that a plea deal could happen between now and then. If it seems that the case is not going well for Sam Bankman-Fried, for example, he could decide to change his mind and plead guilty to some of these charges that he has previously pleaded not guilty to. We really just don't know if that will happen. It is not out of the realm of possibility, but assuming that it doesn't, then we have to wait for the full course of this thing to play out, and this could go well into the later part of the fall.
Speaking of lengthy, looking at the 7 charges against Sam Bankman-Fried, 5 of them carry a maximum sentence of 20 years. Now, what is the chance that he is going to actually receive a sentence that long?
Well, he has to be convicted first, so that has to be established first and foremost. He is still innocent until proven guilty, as this is the U.S. justice system. But theoretically, he could be charged with the maximum penalty here, especially given the high-profile nature of this case, just the sheer number of people that are involved in it. And if that happens, when you do the math, as you said, a number of them carry a maximum penalty of 20 years. 2 of the other charges carry a maximum penalty of 5. We're looking at over a century he could be sentenced to in prison, and he is 31 years old. So very realistically, that could be the rest of his life if this case does not go his way.
All right, Kayleigh Lines, thank you so much for joining us. Kayleigh Lines, she's down in downtown Manhattan in front of the federal courthouse. Sam Bankman-Fried, jury selection begins for that trial. And I think for the people in the crypto space, the players in crypto, this is really important because, I mean, it's such a black eye for this industry, this asset class that's really trying to establish credibility. And when you have one of your exchange, the leaders of your exchange, charged with fraud and on a federal level, boy, that's a big issue.
Serious, yeah. And I think, what Kayleigh was also saying, too, just the high-profile nature of all of this and all of the retail money that was caught up in this, I think there's a lot more sympathy than for the people who lost, what are we talking, millions of dollars here, more than that?
Yeah, it's going to be pretty extreme. And again, I think it'll be closely watched by people just within the crypto space in particular. I think probably a lot of people will probably say, boy, I kind of hope he goes down because I don't want him in any way, shape, or form representing this nascent industry.
Yeah, I would think so. It's been a ton of press, negative press at that. So, yeah, we'll see. I mean, like Kayleigh said, he's vocal and he's going to plead his case.
Yeah, publicly. I'm looking at just, my proxy for all things crypto. It's Bitcoin, 27,400. It's kind of hanging in there. I mean, you can make the case that this thing should be a lot lower just because, kind of calls into question the legitimacy of some aspects of this asset class here. When one of your major exchanges, goes belly up, then you've got federal corruption charges against its CEO and founder. So, but Bitcoin showing some resilience, so we'll keep it. It's still worth Matt Miller talking about it. We know that for sure. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Prices for pre-owned Rolex watches are falling on the secondary market. An index of the timepieces declined by 2.2% in September, according to market prices tracked by the Bloomberg Subdial Watch Index. Bloomberg's Andy Hoffman says collectors are looking for more value.
They're moving to brands like Cartier, like Omega, like Breitling, and even Tudor, which is the sister brand to Rolex. And so those watches have still declined in price, but they have declined at a less precipitous rate than the big, most hyped watches.
Now, one place you can pick up a watch is Macy's, but you won't have to head to the mall. The retailer is opening 30 new small format stores by the fall of 2025. Bloomberg retail reporter Olivia Rockman explains why.
For a long time, traditional malls, especially what's called B and C malls, which are kind of not as luxurious as A malls, have been on the decline. Consumers have adjusted the ways that they shop. They don't go to malls in the same way that they used to. And so for Macy's to have a brick and mortar presence in a place where there's also a Walmart or a Target or a grocery store, it's more likely that they'll get customers in the door than if they're in a mall that isn't so successful anymore.
Macy's shares right now down about 1%. And shares of WeWork, they are taking a hit. They're down about 21%. And this after the company skipped interest payments due due on 5 of its bonds. Now, the co-working firm withheld $37.3 million of cash and nearly $58 million of in-kind payments on the notes, kicking off a 30-day grace period before a default. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. Stocks are slumping while the retreat in Treasuries gets fresh legs after jobs data this morning bolstered the case for the Federal Reserve to keep interest rates elevated. Right now, we have got the S&P 500 index trading lower. The S&P is down 58 points, a drop of 1.3%. Dow Industrial is down 384, decline of 1.1%, while the NASDAQ Composite Index is down 215 points. For NASDAQ, a drop right now of 1.6%. 10-year yield, 4.76%, with the 2-year at 5.13%. Spot gold down $1.80 the ounce to $18.26, down by about 0.1%. West Texas Intermediate crude, $89.99 a barrel. It is up by 1.4%. The yen depreciated past the psychological support level of 150 against the dollar, putting traders on watch for possible intervention by Japan to prop up the currency. So the Dow, the S&P, NASDAQ all in the red today. And sources tell Bloomberg United Airlines is poised to announce an agreement to buy a double-digit number of Airbus A321 narrow-body jets, and an order may be announced as soon as today. UAL shares, they are down 1.7%. Boeing up 0.9%. ADRs of Airbus, they are down by 0.5%. Again, recapping, stocks lower across the board. S&P down 56, a drop right now of 1.3%. I'm Charlie Pelleton. That is the Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Molly Smith, Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Radio. You know, in this program, we like to talk weed, the cannabis business. It's fascinating, particularly for my co-host, Matt Miller. So we like to stay on top of all the issues in that growing industry. And we can do that today.
Industry.
Yeah, you saw what I did there.
Yeah, I like
Josh
it.
Joseph, CEO of Big Plan Holdings. He joins us live here in our Bloomberg Interactive Broker Studio. Josh, thanks so much for joining us here. What is Big Plan Holdings, and how did you get here?
Yeah, thank you for having me. Big Plan Holdings is a diversified family office that my wife and daughters run out of Nashville, Tennessee at this point, focused in cannabis, real estate, hospitality, fashion, professional sports, music, and entertainment.
And you funded this family office with the sale of your
cannabis company.
Cannabis
out of Chicago. Yeah, we founded a company in the Chicagoland area back in 2014-15, and grew that to the largest privately held cannabis company in the U.S. upon an exit in July of 2020.
And who'd you sell to?
Curaleaf acquired us. Yeah.
That's a public traded Canadian
public Canadian company.
Nice.
Yeah, you can only be public right now in Canada, in the cannabis space.
That's a good American story. Right?
Yeah.
So what's the story with the legality of cannabis in Tennessee right now?
Not much of one. Yeah.
Not much of one.
Yeah, not much of one. Yeah, Tennessee is going to be one of the last remaining states to fall. Is my guess at this point. So
why is that?
Tennessee fiscally is a very strong state. So, more often than not, the states will jump in because of, needing some additional money to come in and, right-size budgets, et cetera. Tennessee's fiscally strong. I think politics also, of course, plays a role in that as well. And I think that they'll be one of the last states to fall.
So when you say fiscally strong, aka they don't have much of a financial incentive here.
Correct.
Okay.
So where are we on the national legislation for cannabis? Because it feels like that domino has to fall before banking can happen. It just seems like that has to happen at some point.
Yeah, a lot of people think that federal legalization is the key. I actually don't.
Okay.
I think a lot of us who've been in the business, I've been in it since 2014, which is about 50 years in any other industry. I think federal legalization really is. We're fine keeping it at the state level in this industry.
But how about like banking?
What we need to have happen are two or three things, or three or four things really. Recently, the Department of Health and Human Services, just about 2 weeks ago, made a recommendation to reschedule cannabis to a Schedule 3 drug from a Schedule 1. That would allow a couple dominoes to fall into place. That would allow hopefully what will be safe banking to be passed on Capitol Hill. Which has already passed through the House 7 times and has failed in the Senate each time. So we're hoping that with this most recent bipartisan subcommittee legislation from a week or two ago that came through, that hopefully we'll get that passed. There's something in the IRS tax code 280E that we are not allowed to use in cannabis. We are very, very hopeful that we will be allowed to use 280E and exercise that to allow for the appropriate deductions to be taken, which will almost automatically allow for all the big MSOs and larger operators to be profitable right away, almost overnight. And then being uplisted and being allowed to be listed on the NASDAQ would be absolutely tremendous. So right now you can only be listed in Canada.
Yep.
So that's why federal legalization, really, it doesn't matter if that makes sense all that much.
It looks like this bill that just went through the Senate Banking Committee seems pretty serious. This is kind of crazy to me. I had no idea that cannabis-related companies right now are forced to operate using only cash. Is that true?
Yeah. That
sounds so archaic.
It's really, really antiquated.
Wow.
Yeah, really antiquated. It's a real challenge in the industry for, as you scale your business. It's a tremendous, tremendous challenge. As a consumer or a patient or a consumer, it's a challenge. And so this would allow really, for the big banks, the FDIC insured banks, to be able to take our money and also provide loans to us, because as of now, to scale your business in the cannabis industry, it's really all cash. You can't provide no one can provide you any leverage in the public markets. So you're getting leverage from private investors like ourselves. We'll lend to certain cannabis operators, et cetera, but they don't come cheap.
Yep. All right. So we have legal cannabis here in New York, but I'm sure you've walked down the streets of New York City.
Yeah.
There's these cheesy weed shops, 2 or 3 to every block.
Yeah.
What did the city get so incredibly wrong here?
Yeah, the state. So it's at the state level, and in my opinion, it's at the state level. State will, enact legislation. They'll adopt rules and regs, as we call them, and. And then New York, like so many other states, unfortunately, will roll out a program and they're just not ready for it. And time again, we've seen this over the last decade when states roll them out, especially in limited license states. there's been a real big push for DEI, diversity, equity, and inclusion, social equity, participation in the cannabis industry. And there are just not the appropriate tools for a lot of these states when they roll out programs to allow for the influx of interest that they're getting, that these cannabis commissions are getting. And so New York is one of many, many states.
Really?
Yeah.
Can you put the genie back in the bottle here?
It's tough. It's hard. Yeah, it's hard. You know, they're going to try. They're trying right now, but it's a challenge.
Because you're supposed to have state-approved dispensaries, which we have a couple or three here in the city. Matt Miller would know the details better than me. But then we have the unlicensed ones.
Right.
And I guess the law enforcement just has chosen not to enforce.
Yeah, that's what they've chosen to do. Okay. You know, at this point, you know, there are bigger fish to fry from a law enforcement standpoint, and so it is tough to put the genie back in the bottle. To your question.
Is that a problem in other states too, or is it just us city folks complaining here?
No, I think it is. I think New York though has really. Has a real issue.
We've done an extra good job.
I think you have a real issue. Coming from Illinois, coming from the Chicagoland area, I will say, as screwed up as our state, my former home state of Illinois is in many respects, Illinois' cannabis program, we were the 11th state back in 2014. They actually did a really nice job crafting a program that did not provide for what is happening here in New York.
What are the economics for a state for the cannabis business? What are the revenue arguments that are being made, have been made, and are they coming to fruition?
Yeah, they are. Yeah. I mean, you know, Illinois recently, had more in sales tax revenue, as an example, in cannabis sales than alcohol sales.
Really?
Yeah.
Oh,
and
okay.
you're going to continue to see that trend around the country, is my guess. So, you know, when these states are putting together annual budgets, this cannabis tax that's coming in is rather significant. I can talk to about Illinois just for a second, just because that was where I started. And if you're a medical patient, you're going to pay about 3 or 4%. I want to say, if you're an adult use customer, you're going to pay somewhere between 30 and 40% of tax.
Okay.
Based upon figure you're at a 35% average tax. So yeah, it adds up. Pretty significantly.
And when we're looking at next states that could legalize weed, cannabis, whatever you want to call it.
Yes.
Cannabis is the proper word here. Can we not say weed? Is that inappropriate?
You can say weed, of course.
That's the ETF.
Oh, right. Yes, excuse me. Right. One of our new favorite tickers. But when we're looking at legalization for future states, I mean, is it really a political argument? Is it a fiscal one? Like, what are the big talking points here?
Yeah, what happens is every state will always roll out a medical program first, every single one. They will typically let that go for a year, 2 years. They'll see how it goes. They will notice that there is not an uptick in criminal activity. They will notice that there is not an uptick in DUIs and all of that kind of stuff that folks get scared of, that officials get scared of. Then they start talking about adult use, recreational use. And so it takes a couple of minutes for a state to come around, and then once they do, it then takes a little bit more time for them to enact adult use legislation. We're seeing it move a little bit quicker now, just because we have so many states that have opted into medical programs. I think we're up to 37, I want to say, states plus 4 territories that I could be off by 1 or 2, but around that number that have at least medical programs. And then when you break that down, you have in the low 20s on adult use.
Hey, Josh, thanks so much for joining us. Really appreciate you coming in here. Josh Joseph, CEO of Big Plan Holdings, talking about the cannabis business, making a lot of movement here on the state level. And I think what's interesting, Josh mentioned, we don't necessarily need federal legislation to kind of get this, continue to see this industry continue to evolve. Hopefully they do a better job than kind of what we do here in New York City. Right now, let's head down to Washington, D.C., World and National News with Nancy Lyons.
Thanks, Paul. House Speaker Kevin McCarthy says he will bring up the motion to vacate today on the House floor. That motion was offered by Congressman Matt Gaetz, and if it passes, it would oust McCarthy from his job as Speaker. Following a morning meeting with the Republican caucus, McCarthy told reporters he has no regrets about his decision to approve a stopgap measure to keep government running.
At the end of the day, keeping government open and paying our troops was the right decision. I stand by that decision. At the end of the day, if I have to lose my job over it, so be it. But I'm going to fight for the American public, and I'll continue to fight.
McCarthy has ruled out any power-sharing agreement with House Democrats in order to keep his job. Former President Trump is back in a Manhattan courtroom for day 2 of his civil fraud trial. Trump calls it a witch hunt and a move to try and stop him from becoming president. He blasted the proceedings while heading into court today and said the judge was given inaccurate information on Trump's assets.
He's been given false information, misleading information, and corrupt information by a very corrupt and incompetent Attorney General.
Attorney General Letitia James is accusing Trump of inflating his net worth, leading to him getting better loans and leading to banks taking on bigger risks. President Biden's son was also in court today. He pleaded not guilty to federal gun charges in Delaware. Hunter Biden faces 3 felony firearms charges, including unlawfully possessing a gun as an illegal drug user. The charges follow a failed plea deal that was questioned by a federal judge. The ongoing UAW strike has cost the U.S. economy nearly $4 billion. That's according to a study from the Anderson Economic Group, a Michigan-based firm. It cites lost wages for workers and more than $1 billion in manufacturing declines at GM, Ford, and Stellantis. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. The selling continues. The S&P 500 index now down 1.2%, approaching oversold levels. Stocks are slumping while the retreat in treasuries gets fresh legs after jobs data this morning bolstered the case for the Fed to keep interest rates elevated. The yen depreciated past the psychological support level of 150 against the dollar, putting traders on watch for possible intervention by Japan to prop up the currency. Right now, we've got the S&P down 50. That is a drop of 1.2%, with the Dow down 349 points, a decline there of 1%. NASDAQ down 196, a drop there of 1.5%. 10-year yield, 4.76%, with a 2-year that's yielding 5.14%. Bitcoin now down 1.5%, 27,427 on Bitcoin. And West Texas Intermediate crude up 1.1%. 89.84 barrel, was at $90 there briefly. Gold, spot gold down $1.40 the ounce to $18.26, a drop now of just about 0.1%. So what is ahead for the equity market given the backdrop of higher bond yields? David Dietz is Senior Portfolio Manager at PPAC Gladstone Bank, and he was a guest this morning right here on Bloomberg Markets.
If this 10-year Treasury yield keeps rising, that just puts pressure on all assets, whether that be real estate, whether that be stocks, whether that be tech stocks or utility stocks and so forth, because it reduces that present value. The question is, what is ultimately going to break the rise in this interest rates? And we're just not sure.
And again, we've got the 10-year at 4.76%. Macy's is going to be opening 30 new small format stores by the end of 2025 as it works to expand its presence outside of traditional malls. Macy's down 0.8%. Rival Target up 0.8%. Kohl's down by 3.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Molly Smith and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio, and that's where you will find us. I don't know, Molly, I can go sit in 2-year treasuries, 5.14%, sleep like a baby. Why would I do anything else?
Because you could go to investment-grade bonds, also sleep relatively like a baby, and get 6.15%.
You sound like a credit person. You sound like somebody who's read the research of our next guest. Megan Horniman joins us here, Chief Investment Officer at Verdance. Megan, what should I do on the credit side? Because for the first time in like forever, I can get yield here.
Hi, this is Natalie here, and yeah,
Oh,
yields
sorry,
are very
Natalie.
No worries. Yields at 6.15% are pretty attractive, but these days it always seems like the best day to buy bonds is tomorrow. So it seems to be going higher and higher. We think we are near the top, and you kind of can lock in rates today at these higher levels. You mentioned the 2-year at 5 and a little bit is nice, but we're seeing investors want to go further out the curve, even if it means taking a lower yield. You can still get close to those 6% on 10-year corporates, and we find that pretty compelling.
Let me just do a correction, Natalie. I apologize. Natalie Trevithick joins us. She's head of investment-grade credit strategy at Payden & Regal.
Thanks, Natalie, for joining us. And yeah, you know, Paul was right. I am a bit of a credit person, at least in a former life here. And, I'm looking at investment-grade bond yields right now, and spreads are still pretty tight, all things considered. There is a little bit of widening here, but I guess, the question for you right now is probably, there probably is no need to take any credit risk, right? Duration is just doing all the work for you.
Duration is doing the bulk of the work, but getting that extra 125 basis points by going into IG credit still seems to make sense. There has been this tug of war between credit looking rich on a spread basis, but attractive on a yield basis. And all factors are signaling that people are yield buyers and are really looking at these high yields that you couldn't get in high yield a year or two ago and seeing it as a relatively safe haven place to park their money.
Natalie, how do you guys think about it over there at Payden & Regal in terms of what this Federal Reserve is going to do here? Is there another one move higher, or do you think they can stay here?
We think there's one move higher. The issue which we think is going to propel that is just still strong employment. Consumers still have a lot of money. Maybe the savings rate is coming down, but their expenditures are still below what they're earning. So we still feel that the consumer has some strength behind them.
Yeah, that's got to be a factor then concerning for the Fed here. And we obviously saw the JOLTS report this morning, job openings not coming down. You must be looking ahead then to Friday and the next catalyst then on the jobs report then for rates. Any expectations as we're looking into later this week?
Yeah, we think as long as you get 100,000 of job growth per month, that could keep us at an unemployment rate of 3.8%. So for the catalyst for the unemployment rate to move higher, which would really maybe give the Fed more reason to pause, we just don't really see that in the cards in the near term.
Natalie, in the credit space, are there certain industries that you guys feel more comfortable here, or some industries that maybe represent better value right here, given where we are in the economic cycle?
Sure. From the credit perspective, we're actually liking the utility sector right now. We've seen valuations cheapen up there, and they tend to be higher quality bonds, which are also secured. So we're seeing better value in that sector today. We're also seeing value in some of the consumer sectors. Autos have also cheapened up a little because of the strike, and we don't think this is going to be a long-term burden on their ability to continue to earn strong cash flows. So that's a sector we also like buying on this little bit of weakness.
How about in terms of credit quality? You think this is a time to maybe be greedy, reach down a little bit, or no need?
Well, we like investment grade credit, but we are fine going down into the BBB space. A lot of the single A names have had so much demand that they aren't offering you a big premium over treasuries. We also think there's some value in the high yield market. We don't think there's going to be a big wave of defaults here. So playing some of that crossover space is pretty attractive because then you get yields closer to 7%.
How about, do you guys have much exposure to the mortgage-backed securities market? Because it just seems crazy with mortgage rates and what's going on in the housing market. I'm not sure if that's where you guys play as well.
Yeah, Payton as a firm has a lot of investments across MBS. It's not my area of expertise, though.
Do you look at anything else in like the asset-backed space? I mean, I guess I would also maybe be a little concerned with like auto loans right now and just anything, as you're saying, if consumer spending might be slowing here, just looking at it from that macro perspective.
Yeah, from the macro perspective, we do see a little bit of weakness, but the strength of some of these securities, particularly in the AAA buckets, it's still very strong. And we have seen valuations cheapen up here. So it's actually can be a bit of an opportunity to buy in this weakness.
Natalie, what do you see in the new issue market? I wonder what the issuers are thinking about here with these rates continuing to move higher. What do you have like in your discussions with new issuers?
Yeah, there's been a lot of issuance in September, but it underwhelmed relative to expectations. And what we're seeing is a little bit of a dichotomy between what buyers want to buy, which is 10 and 30-year bonds, and what issuers want to issue, which is really the front end of the curve. We're seeing a lot more 2-year issuance this year than we have before, and deals are coming with a lot of 2, 3, 5, 7s because they rather have these higher rates for a shorter period of time. And they also borrowed so much 30-year paper post-pandemic at virtually free rates, so they already have that part of their maturity wall very full. So we see them kind of topping up more the belly of the curve here.
So what are your contacts on the sell side saying about this? Are the issuers going to start giving you what you want?
No, deals have been coming up very tight levels, very aggressive, typically, pricing 25 basis points tighter than their initial price talk. And dealers and investors aren't dropping from these deals. So the demand just is outweighing the supply right now. So we think it's a little bit more of a seller's market. And also you have to think that these companies aren't refinancing their entire debt stack at these higher yields of 6%. They've been able to borrow very cheaply for many years. So they aren't going to stop borrowing just because interest rates have gone up. They want to maintain their access to the capital markets.
All right, Natalie, thanks so much for joining us. Really appreciate you taking the time, as always. Natalie Trevithick, Head of Investment Grade Credit Strategy at Payton & Regal. And I kind of find it interesting to note because when the pandemic first started, we saw issuers just flood the market because they had to shore up their balance sheets. They didn't know what was going to happen in the world. I'm thinking even like some of the cruise ship operators.
Using the islands as collateral?
Yes.
Some of those. Those
yes.
are some crazy bond sales, yeah.
But, now, those rates were almost zero at the time.
Why not?
And now they got to come back to the market where you've got a 2-year north of 5%. The cost has gotten so much higher. But as Natalie was suggesting, they got to maintain access to the capital markets.
And demand outweighing supply. Where have we heard that before?
Yep, exactly right. So we'll see about that. S&P 500 off 1.2%. NASDAQ off 1.5%. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Shares of Point Biopharma Global, they are soaring. They're up about 85%. And this after news that Eli Lilly has agreed to buy the company in a deal valued at $1.4 billion. Bloomberg's Simone Foxman has details.
Eli Lilly will pay $12.50 a share. That's 87% higher than Point's Monday closing price. And this deal is expected to close by the end of this year. Now, Point develops radiation therapies for cancers. In specific, a prostate cancer drug is in a late-stage trial. We should get the results out by the end of this year, and that could lead to regulatory approval.
Now, I told you about Point shares. Eli Lilly now down more than 3.5%. And Taylor Swift did it, so why not Beyonce? Queen Bey is bringing her world tour to the big screen in December.
The goal for this tour was to create a place where everyone is free.
That was a clip from the trailer of Renaissance, a film by Beyonce. She'll be making more money from the film by cutting out a studio middleman and releasing it directly with AMC Entertainment. The movie would also be screened at Regal and Cinemark with showings on IMAX screens. The pre-sale, it's begun. U.S. tickets start at $22. Shares of AMC right now, they're down about 0.7%. Cinemark up about 0.6%. And if you remember, Taylor Swift's The Eras Tour concert film set pre-sale records, and now she's pulling in the ratings too. NBC Sunday Night Football drew 27 million viewers, up 22% from a year ago, and included 2 million more women. Swift was at the Chiefs-Jets game and is rumored to be dating Chiefs tight end Travis Kelce. Those are the company stories we're following. I'm Lisa Mateo.
This is Bloomberg Markets on Bloomberg Radio.
All right, Molly Smith, Paul Sweeney live here in the Bloomberg Interactive Brokers studio in New York City. Markets on the sell-off here today. S&P 500 off 1.25%. The Nasdaq off about 1.6%. 10-year Treasuries yields, they're moving higher, certainly on the 10-year side up 10 basis points, 4.78% on your 10-year. So how about that? Let's head down to Washington, D.C. right now, and we'll get world and national news with Nancy Lyons.
Thanks, Paul. Former President Trump is again sounding defiant on day 2 of his civil fraud trial. As he entered the courtroom today, he once again condemned New York Attorney General Letitia James for even bringing the case against him.
This case should be dismissed. This is not a case. And she should probably be dismissed also because she's terrible and grossly incompetent.
Trump has already been found by the judge to have committed fraud by inflating the value of his assets. But there are additional charges that are being litigated and decisions to be made on punishment. President Biden's son Hunter was also in court today and pleaded not guilty to 3 federal firearms charges.
Hunter Biden's plea comes after a deal to resolve tax and firearm charges fell apart when a judge refused to accept the terms of the agreement. The president's son is accused of lying about his drug use on a form to buy a gun in 2018. Hunter has acknowledged he struggled with an addiction to crack cocaine, but his attorneys say he didn't break the law. They also suggested the prosecution of Hunter Biden is the result of pressure from Republicans who thought Hunter got a sweetheart deal. Steve Rappaport, Bloomberg Radio.
House Speaker Kevin McCarthy says he will bring up the vote today on whether he should keep his job. Congressman Matt Gaetz filed what's called a motion to vacate, which would oust McCarthy if it passes. Bloomberg's Anne-Marie Hordern says McCarthy may need Democrats to support him, but he's not willing to enter into a power-sharing agreement with them.
Speaker McCarthy said that is off the table. And when he briefed reporters and they were asking about this, he says, look, we have the majority. Why would we surrender it? I'm not willing to do deals with the Democratic Party to maintain this job.
Bloomberg's Anne-Marie Hordern reporting from Washington. Congressman Henry Cuellar says he's okay despite having been the victim of a carjacking last night in Washington. He says he was approached by 3 men with guns and he let them take his car. He says police recovered that car and his phone within just a couple of hours, but Capitol Police are still searching for the suspects. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Molly and Paul.
All right, Nancy Lyons, thank you so much. We appreciate that. Molly Smith and Paul Sweeney here with you. You know, Molly, Matt and I, we talk a lot about the private credit business and how big that business has gotten, that market has gotten since the great financial crisis. And I always say, like, if I were coming back onto Wall Street as a young person, I think I might really look hard at the private credit business. We've got a story in the Bloomberg Terminal that kind of goes to that issue. And it's really in the leverage loan business. Carlyle Group is asking both Wall Street banks and private credit lenders to arrange debt packages of at least $2.5 billion to support its potential acquisition of stakes in some of medical device maker Medtronic's business units. That's according to people with the knowledge. So it kind of goes to the issue, you know, in the great financial crisis, banks had a lot of limits or additional limits put on kind of the types of loans they could hold, the assets they could hold, and including some of the highly leveraged loans. And that kind of seeded this new business called private credit. And we're seeing bigger and bigger deals here, bigger checks they're writing, like this Carlyle deal.
Yeah, and in the meantime, you know, if I were, you know, the traditional Wall Street banks right now, I'd probably feel like I'm missing out on some of the action here that the Wall Street banks have to deal with far more onerous regulation than some of these private credit lenders do. So it just seems like, you know, a bit of like they're stealing the business away.
They are, absolutely. And, you know, it notes here in the Bloomberg story that banks had been stuck with debt on their balance sheets as the Federal Reserve quickly raised rates, hampering their ability to underwrite new deals. But it's just, you know, you see the junk bond market recovering in terms of new issuance, leverage loan markets recovering. It's not just the Wall Street investment banks that are going to benefit. It's these private credit funds that have really set up and amassed huge amounts of capital. And they initially were focusing on kind of the middle market, but now they're writing bigger checks. And so,
getting up there.
Again, more competition for some of these Wall Street firms. So fun to watch that market as it develops. All right, coming up, we have Joe Matthew. Sound On with Joe Matthew from Washington, D.C. That starts right now.
from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball. To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We take air as the Speaker's gavel hangs in the balance. Welcome to the fastest show in politics. As Kevin McCarthy's Republican critics prepare to vote on a motion to vacate, and Democrats are apparently not coming to his defense. This is happening in real time. Either way, we will witness history. Either way this goes over the next 2 hours, and we'll discuss with Congressman Ben Cline. Republican from Virginia is a member of the Freedom Caucus and will bring his views straight from the Capitol in a moment with analysis from our signature panel. I'm glad to say they're both with us today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. So it's already been a fascinating day, if not a dramatic one here in Washington. Depends what side you're on here, I suppose. For those of us simply trying to keep up with the news, though, it's been breathless after Congressman Matt Gaetz last night dropped his threatened motion to vacate. He spoke from the House floor.
Declaring the office of Speaker of the House of Representatives to be vacant. Resolved that the office of Speaker of the House of Representatives is hereby declared to be vacant.
Simple as that. We've already heard from the leadership on both sides today following a Republican caucus meeting. Speaker Kevin McCarthy out in front of reporters with his view early today.
If you throw a speaker out that has 99% of their conference, that kept government open and paid the troops, I think we're in a really bad place for how we're going to run Congress.
So are you expecting Democrats to back you up then?
No, I personally am not.
Do you need their help to remain in leadership?
No, if five Republicans go with Democrats, then I'm out. So it's whether
likely.
Probably so.
Probably so, he says. If 5 vote with Democrats, I'm out. We also heard from Hakeem Jeffries, the Democratic leader in the House. Very difficult to decipher his language. He says they will work with non-extreme members of the Republican conference, something to that extent, but nothing specific, although we also heard from Congresswoman Pramila Jayapal, of course, head of the Progressive Caucus in the House. She says it's not a Democratic problem. Don't look at me. And that's where we begin our conversation with Congressman Ben Cline. The Republican from Virginia's 6th District is with us live from Capitol Hill in a very busy Cannon office building rotunda. It's good to see you, Congressman. I wonder your thoughts on what is about to happen here and if you plan to support Speaker McCarthy.
Well, it's definitely a historic day. This motion to vacate hasn't been used in about 100 years. So it's going to be an interesting day, and we'll see how things sort themselves out. It has the potential to resolve itself and us continue on the road we're on, or it has the potential to be a very chaotic day and next few days.
You've been known as an ally of Speaker McCarthy. Maybe you can correct me if that's not the way I should put it, even as a member of the Freedom Caucus. What will determine your decision here?
Well, I supported him for Speaker, but I also applauded the reforms that the Freedom Caucus were able to get, including the ability of one member to call a motion to vacate. That's being used. But I will say that the vast majority of the Freedom Caucus today have indicated that they are not going to vote to vacate the chair because it's a matter of timing. What we're in the middle of right now is the appropriations process. We have conservative appropriations bills moving through the floor. And do we want to interrupt that process right now to throw essentially the House into chaos because there is no backup for Speaker, and right now we're trying to govern the way that we said we were going to. With all 12 appropriations bills coming to the floor, the Senate hasn't passed any, and we're demonstrating that Republicans can lead if given power in the House.
Did you receive assurances from the Speaker in the Republican caucus meeting this morning that gave you faith in him going forward?
Well, we don't talk about what was discussed in conference, but what we will say is that the vast majority of members, the vast majority of Freedom Caucus members, have also decided that when it's a matter of timing, when to call the motion to vacate, whether to call a motion to vacate now is not the optimal time, since we're in the middle of these appropriations bills trying to get the most conservative bills to the floor possible. If what we end up with are 5 moderates teaming up with Democrats, Hakeem Jeffries is urging to vacate the chair. You have the potential for not just the same situation or not just a chaotic situation, but a much worse situation than we have now.
Well, okay, so it's difficult to tell if Speaker McCarthy has the votes, Congressman, though. Does he have yours?
Well, I'm still considering, but I will say that as a matter of timing and as a member of the Appropriations Committee, my primary goal is putting these conservative appropriations bills on the floor and getting them through. You know, we had 3 of 4 bills passed last week. We secured our border with our Homeland Security bill, gave our troops pay raises with our defense bill, made sure that our veterans were taken care of. Unfortunately, our agriculture bill was defeated by, again, moderates who didn't like the cuts. We are really trying hard to cut spending to get rid of the woke and weaponized government in these appropriations bills. And you have to ask whether now is the time to interrupt that process with a motion to vacate and select a new speaker.
Well, without invading your conference meeting earlier, Congressman, what do you want to hear from Kevin McCarthy? Is it a pledge to bring these single-issue spending bills to the floor, to avoid another CR, or something altogether different?
Well, we did not want to shut down, but I am not a fan of the status quo. I'm not a fan of the current 45-day CR. I voted against it because I don't support the Pelosi spending that's going on right now, and I don't support the lack of a border solution. And so what we had before that, what I voted for, was a continuing resolution for 30 days that did include border security, that did include cuts to spending. And that was something that we could have demonstrated to the American people that we're moving in a different direction, that we're not just treading water. And that's why maintaining the status quo is not acceptable.
Mm-hmm. Well, I'm trying my best to understand you, and it sounds like we're making a little progress here, Congressman. If there was an assurance to have border security funding in either another CR or a piece of legislation that gets to the floor to help fund the government for a longer term, if you saw that coupled with spending cuts, you'd be behind Kevin McCarthy as Speaker.
Well, I think that was the first continuing resolution that Kevin supported. He put it out there. It was ultimately defeated, and we ended up with where we are, 45 days of the Pelosi spending levels put forward. My hope is that we would avoid that moving forward. The more that Kevin can reassure us that that is not what he is going to do, that he is going to push for border security, which he has, then that's going to definitely go a long way toward reassuring me that we're on the right track.
Okay, that's a start here at least. What happens in 45 days? We just talked about the framing of this continuing resolution. How are you looking at the next couple of weeks here, Congressman? Did we simply prolong a shutdown to the middle of November, or can progress be made?
Progress can and is being made. What we saw from the majority leader, Steve Scalise, was a calendar of how we're going to get the rest of these 12 appropriations bills through in October. And if that's interrupted by a motion to vacate that's successful, then that calendar goes out the window and we're not able to get it done, and then we're facing another shutdown. So my hope is that we can get these 12 bills through, that we have that motion to vacate as an option, but that we focus right now on these appropriations bills.
Well, I'll tell you, one of the issues, the potential problems illuminated by Matt Gaetz and some other Republicans, some members of your own Freedom Caucus, Congressman, has been the potential for Kevin McCarthy to cut a deal with Democrats. Some see this as an example of that with the continuing resolution. Is that your biggest worry now, that he turns away from you and toward Hakeem Jeffries?
Well, he has indicated he's not willing to make any deals with Hakeem Jeffries, and Hakeem Jeffries has indicated that he wants to take McCarthy out, that he wants to remove McCarthy as Speaker. So he's instructed all of his Democrats to vote for the motion to vacate. So if it's Matt Gaetz and all of the Democrats and one or two others, then that's where we're going to end up. But at this point, my focus and the Speaker's focus and the overwhelming majority of the conference's focus is on getting these conservative appropriations bills through, standing up to a Democrat Senate with their appropriations process. They haven't passed a single appropriations bill. And ultimately, standing up to Joe Biden and removing this woke and weaponized government from these appropriations bills that we're able to do through the House.
You're on the Committee on Appropriations. You're also on the Budget Committee, Congressman. We could talk Freedom Caucus all day long, but these are very important committees for the very issue that we're talking about when it comes to funding the government. What's the next step here? How do negotiations resume? Do you just continue with single-issue spending bills until all 12 are passed, wait for a conversation with the Senate, or is there something more aggressive that can be done here in 45 days?
Well, one of the things that this city understands is power and leverage. And when the House passes its appropriations bills and the Senate doesn't pass any and has to come to the table on how to address spending, we are at an advantage. So we want to use that advantage. We want to keep pressing on these appropriations bills. We can win on the policy and on the spending if we just press ahead. And that's what we're planning to do this October. And it is a question of whether now is the right time to interrupt this process with a motion to vacate.
Lastly, Congressman, we understand that the motion to table will be up soon. It is expected to fail. Will Kevin McCarthy be Speaker by the end of the week?
Well, that remains to be seen, but my hope is that we keep on our track. We've got 2 appropriations bills up this week, and if we can do those 2, natural resources, energy and water, ledge branch, we've got a lot on our plate, and we need to keep our eye focused on delivering for the American people.
It's great to have you with us today. Ben Cline, Republican from Virginia's 6th District, a member of the Freedom Caucus, and a real example of the conversations that are happening behind closed doors right now with decisions that have yet to be made. You hear a lot about uncharted territory. Yeah, this is it. We don't even know how this show is going to end right now, never mind how the day is going to end for Speaker Kevin McCarthy. Let's assemble our panel for their thoughts. Rick Davis and Jeannie Shanzano, I'm glad, are with us today, Bloomberg Politics contributors, with the view from both sides of the aisle here. Rick, what do you think about the next couple of hours? We actually saw the motion to vacate filed by Matt Gaetz last evening, and this could take a couple of days. They have a couple of days potentially before they vote, although it could happen today. Would Kevin McCarthy be fired if that vote took place right now?
Yeah, hard to tell. I think what your interview just now with Congressman Cline indicated when he said that Hakeem Jeffries has instructed his Democratic members to vote for the vacate, that was news to me. I've been hearing Democrats all day long talking to the press about, I'm thinking about it, I'm not thinking about it, I like it, I don't, there's a problem with the moderates. And I'll be honest, I think this is all up to the Democrats right now, because it does sound like there are 4 or 5, maybe 6 Republicans who have made a conclusion that they're going to vote to vacate, and that's enough to take him out of the chair if the Democrats support that motion.
I'd love your thoughts on this, Jeannie, because we did hear from Hakeem Jeffries a bit earlier today. Listen to how careful the language was that he used. Coming from a Democratic caucus meeting, he did not take a single question.
We encourage our Republican colleagues who claim to be more traditional to break from the extremists. In the chaos, in the dysfunction, in the extremism, we are ready, willing, and able to work together with our Republican colleagues, but it is on them to join us to move the Congress and the country forward.
He's basically saying it's on them, period. It sounds like, Jeannie, if you kind of read between the lines here. But my goodness, Hakeem Jeffries, maybe we can't figure out here, but I couldn't figure out what Ben Cline thought about this after a 10-minute conversation. How about you?
Yeah, that was just a fascinating conversation because you asked him pretty repeatedly, where he stood. Was he going to support the speaker? And he would not, give you a definitive answer, which suggests to me that what we keep hearing on the Republican side, there's 5 to 7 to 10, maybe upwards of, maybe 21 who would vote against the speaker. There are people for whom the speaker has really, really not won their support, like Klein. And so it is just fascinating to hear. And on the Democratic side, what we understand coming out of the caucus is people were not inclined to save Kevin McCarthy's job, given everything that has gone on. And what really seemed to sort of turn the heat up in the caucus meeting was when they played the clips of Kevin McCarthy over the weekend, blaming Democrats for the shutdown or the potential shutdown. Those clips of him going on TV and blaming the Democrats. And then I heard Richie Torres, one among many, saying, listen, if Kevin McCarthy wants our support, he's going to have to ask us and he's going to have to deal with it. And McCarthy and McCarthy doesn't seem inclined to do that. So if he's not going to ask, I don't think they're going to jump in front of the bus to save him. And he is then going to be left hanging, it looks like. I mean, hard to know, but it doesn't look like, at least on the motion to table, Democrats are anywhere near close to pushing that or killing Matt Gaetz's motion to vacate.
No, absolutely. Quite the contrary. This is from Jake Sherman at Punchbowl, just posted on Twitter. I still call it Twitter. A dear colleague from Hakeem Jeffries. Listen to this, Rick and Jeannie. Quote, given their unwillingness to break from MAGA extremism in an authentic and comprehensive manner, House Democratic leadership will vote yes on the pending Republican motion to vacate the chair. Let that marinate while we listen to Pramila Jayapal from earlier today, stopped by reporters in the hallway.
This is not a Democratic problem. This is a Republican problem. They supposedly have the majority. They should be able to pick their own speaker. Our speaker is Hakeem Jeffries. It always has been. It was for 15 rounds. It will continue to be.
So does that mean here that just nobody trusts Kevin McCarthy?
Nobody trusts Kevin McCarthy. Nobody trusts Kevin McCarthy. And why should we? He has broken his commitment over and over again.
This is amazing. It's the same script as Matt Gaetz. Nobody trusts Kevin McCarthy. Rick, when you add all of this information, it doesn't look great for him, does it?
Well, Representative Jayapal is the Democratic version of Matt Gaetz. And so, I mean, I think the two go together. They're both of the extremes of either party. And sometimes when you stretch that circle around, the extremes to touch. Look, I mean, this is pretty news breaking that Hakeem Jeffries, as Ben Klein just said, has instructed his caucus to support the motion to vacate. Now that depends upon how many want to stay in the room or how many are willing to vote present. This could go down to the wire. I think what we're watching here is a very close race.
Amazing stuff. It's happening before our eyes, and we have Rick Davis and Jeannie Shanzano to walk us through it. Stay with us right here on the radio, on the satellite, and on YouTube as we witness history together on Sound On. I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. We've got a lot of red on the screen, with the Dow, the S&P, and NASDAQ all declining. Stocks are slumping, while the retreat in Treasuries got fresh legs after jobs data bolstered the case for the Fed to keep interest rates elevated. 10-year yield, 4.78%. 4.78 on that 10-year now, with the 2-year 5.13%. Stocks lower across the board. S&P now down by 55 points. Drop there of 1.3%. Dow Industrials down 379, a decline right now of 1.1%. NASDAQ down 273, a decline of 1.7%. Spot gold down $2.50 the ounce to $18.25, down 0.1%, while West Texas Intermediate crude below $90 a barrel, now $89.47. WTI up by 0.7%. The yen surged for the weakest levels in a year versus the dollar, amid speculation that Japanese officials were acting to slow the currency slide. Certainly, Wall Street keeping an eye on major developments on Capitol Hill today, with House Speaker Kevin McCarthy's job on a knife's edge. Republican Congressman Ben Cline represents Virginia's 6th District. He was interviewed moments ago right here on Sound On.
Well, it's definitely a historic day. This motion to vacate hasn't been used in about 100 years, so it's going to be an interesting day, and we'll see how things sort themselves out.
And you can hear more of that conversation on the Sound On podcast. You can download it wherever you get your podcast, and of course, stay with Bloomberg Radio and Sound On for the very latest out of Washington. Again, recapping, stocks lower, S&P down 53 right now, drop there of 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Remarkable day here in Washington as we wait to learn the fate of Kevin McCarthy as the Speaker of the House. The motion to vacate has been filed, and we'll see a few things happen. There's a motion to table that motion to vacate that we're going to walk through shortly. And we've got an eye on the House floor for you for when that vote actually comes up. We could be in a world in which Kevin McCarthy is no longer Speaker at the end of this day. We could also be in a world in which he is more powerful, having survived it. That remains unclear. One thing we do know is that he is calling Matt Gaetz bluff. He talked to reporters earlier today.
Look, I think Matt has planned this all along. It didn't matter what we transpired. You know, he would have done it if we were in shutdown or not. I firmly believe it's the right decision to keep government open, to make sure our military is still paid, our border agents are still paid. And if that makes a challenge based upon whether I should be Speaker, I'll take that fight.
So you're calling his bluff?
Yeah, I'm calling his bluff, and here we are. Let's find out what happens. We talked to Ben Cline, member of the Freedom Caucus, Republican from Virginia, at the top of the hour. He voted for Kevin McCarthy as Speaker and would not tell us where he would vote today. As we reassemble the panel, Jeannie Sheehan Zaino and Rick Davis join Bloomberg Politics contributors with a lot in the air here. Hakeem Jeffries has made it clear, Jeannie, and now so has Nancy Pelosi, out with a statement that says the Speaker of the House is chosen by the majority party. In this Congress, it is the responsibility of House Republicans to choose a nominee and elect the Speaker. On the floor at this time, there is no justification, she writes, for a departure from this tradition. Jeannie, how important is it to hear from Nancy Pelosi right now, having already heard from the active leader, Hakeem Jeffries?
I think it's critical. And we heard over the weekend that Nancy Pelosi was quietly urging Hakeem Jeffries not to go in and help save, or the Democrats as a whole save, Kevin McCarthy. But she said in the end, she would, of course, follow the Speaker. The Speaker has now spoken, and now has the Speaker Emeritus, Nancy Pelosi, in very strong language. And I think she really reflects what we're hearing from so many Democrats, which is, number one, this has been chaotic from the start. 15 ballots to get elected, walking us to the brink of a default, walking us to the brink of a shutdown, and now a historic motion to vacate. Not only, they don't have a lot of love for Kevin McCarthy. They blame him for Donald Trump's position in the Republican Party as the leader, saving him after January 6th. They blame him for reneging on their promise with Joe Biden that he made to keep the government open and the funding levels. They blame him for what he said over the weekend. I mean, they just don't trust Kevin McCarthy, and they see no reason, and they don't think their constituents will support going in and saving him and keeping his speaker. And to make it worse, we're hearing he didn't even, while he spoke to Jeffries, he didn't ask for their support. And I think had he may get some. But if he's not willing to ask and play with them and negotiate, they're not just going to put their foot forward to save him.
But Rick, this cuts both ways, doesn't it? For Democrats to turn like this, I appreciate the politics behind this, and maybe Nancy Pelosi is right. The majority should pick the speaker. But Democrats get nothing done without a Speaker of the House in this case, and we've got a potential shutdown, 46 days away, if my count is right here. Does this potentially work against Democratic priorities, or I'm in another world here where the institution matters?
Yeah, I think that she's making the same point you are. I think the difference might be timing. I think they're used to doing things when they need to quickly, like they did on the keeping the government open. So all that happened literally in the course of 2 hours after weeks of built up. If Kevin McCarthy is ousted as speaker today, you may have a new speaker tomorrow. I mean, it doesn't take long to call for a speaker's race, right? Literally almost instantaneous with his removal would be a vote to put a new speaker in. And maybe they're making a calculation that a Stephen Scalise or a Tom Emmer or Patrick McHenry, maybe these guys would be better. Maybe there's more resistance at that point to the Freedom Caucus and the MAGA team that they like to talk about. So, there are a lot of calculations being made. I do think Jeannie's right. I think that Speaker McCarthy has burned a lot of bridges. The smoldering embers of smoked out bridges are right behind him right now, both in his caucus and with the Democrats. And so he may find out that the way he's handled the speakership was not enough to support his tenure for 1 year. I mean, we're talking about 10 months in, and he could wind up being deposed today.
It's truly incredible. We asked Jim Jordan last evening on Bloomberg. He said, I don't want to be speaker. And I just wonder if any of the names that Rick just mentioned, Jeannie, would ever stand in front of this train, because, boy, this is not for the faint of heart here, obviously. And by the way, nothing's actually keeping Kevin McCarthy from running again, right?
Well, that's right. And, I think one thing we forget in all of this is the speaker is not just the party leader. This is a constitutional requirement. Article 1, Section 2. The speaker is second in line to the presidency. We have to have a speaker. It could take a long time to get there. Certainly, Kevin McCarthy could run again. I know it's hard to imagine anybody wanting this job. It is a very, very powerful position. So I think if the chips are down, somebody may step forward. Maybe they would be better off getting somebody who's reluctant, who can say, yeah, I'll do this for you, Republicans, if you don't hold my feet to the fire the way you did Kevin McCarthy. I don't know. I'm not sure who would be there to want it right now. It is a very, very tough job, as we've seen with Kevin McCarthy. Yeah. But, it could be anybody. I know the name we heard over the weekend was Tom Emmer, but he has said he is firmly in Kevin McCarthy's camp.
Well, so is there a Machiavellian world, Jeannie, in which Democrats fire or don't defend Kevin McCarthy, they let him get fired, and just let the House go to hell for the next year? That this is actually about the election and retaking the majority?
At this point, I think it is possible. I certainly hope that doesn't happen. I think Democrats are right to say this is a Republican issue. They need to resolve it. But also, to your earlier point, we do need a functioning Congress and a functioning government. And earlier today, when Hakeem Jeffries was talking in one of his interviews, he did make the case that now is time to change the House rules. You don't want to let 1, 2, 5, 7 members hold up the business of the people. And unfortunately, that's what the House rules allow. And in your interview, you asked Klein, he said he supports the rule of the motion to vacate at 1. I think those are the kinds of things after this chaos, if and when it's over, they really need to rethink these rules so we can have a functioning House.
Well, that was a product of a protracted speakers battle, right, Rick? Do you see that maybe being a good thing that emerges from this, and that's a change in rules?
Oh, they got to change this rule. It's a stupid rule, and the only reason it was cut this way was, the Speaker McCarthy's desperate need for votes. I would remind everybody that the rule has changed quite a bit over time. I mean, even Pelosi was under a tighter rule on this in her first term as Speaker. But they ought to change it. I mean, this is what he ought to be cutting deals with the Democrats to do, is say, the minute this race is over, okay, say you don't get involved at all in the Speaker's race, let's have the next vote be shifting the amount of votes needed to put on a motion to vacate, because you just can't live with that knife hanging over your throat as Speaker making decisions. And you get to this point. I mean, like, what happens if that happens before the end of the year or before the government shutdown gets fixed? I mean, it's a stupid way to operate. It's not at all what was envisioned by this. It took us 100 years to get to this point. It ought to take us 100 years to ever see this happen again.
True enough. 1910, Speaker Joseph Cannon. We see lawmakers like Ben Klein earlier joining us from the Cannon House office building. That's the rotunda where you see all the lawmakers doing the TV shows. Named for Speaker Joseph Cannon, faced an unsuccessful motion to vacate that he introduced himself to prove a point. The Republican from Illinois lived to see another day here as Speaker. We'll see about Kevin McCarthy. Rick Davis and Jeannie Shanzano, stay with us. They're back on the floor of the House now. Procedural votes are starting, and we'll bring you there next to see what's going on after we update world and national news. Nancy Lyons has that from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden is reassuring allies that the U.S. will continue to support Ukraine. He spoke in a group call today with leaders from Canada, Germany, Italy, Japan, Poland, Romania, France, the UK, the European Commission, European Council, and NATO. Aides say Biden felt the need to talk to the leaders after money for Ukraine was removed from the short-term agreement to avert a shutdown. Congressman Henry Cuellar of Texas is breathing easier today following a carjacking last night not far from Capitol Hill.
I do have a black belt, but I recognize when you got three guns. I looked at one with a gun, another with a gun, at the one behind me. So they said they wanted my car. I said, sure, you got to keep calm in those situations. And then they took off.
Cuellar joked with reporters today and said he was most upset they stole his sushi. Thankfully, he says his car, phone, and sushi were found within a couple of hours. Capitol Police are still searching for the suspects. Officials in New York say a fingerprint on a ransom note led police to a camper where 9-year-old Charlotte Sena was found. She disappeared over the weekend during a camping trip. New York Governor Kathy Hochul says a suspect, 46-year-old Craig Ross, was taken into custody.
After some resistance, the suspect was taken into custody, and immediately the little girl was found in a cabinet, cupboard.
Hochul says the girl appeared to be physically unharmed. During arguments today, the Supreme Court justices signaled support for the funding system for the Consumer Financial Protection Bureau. A payday lending group brought a case against the current funding structure, saying it violates the Constitution because it does not require a congressional appropriation. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long at Bloomberg. We've got the S&P very close to session lows right now at 42.29, down 59 points, down 1.4%. Dow Jones Industrial Average hovering just above 33,000, 33,027 on the Dow. It is lower now by 1.2%, down 405 points. The Nasdaq Composite Index is down 243, a drop right now of 1.8%. Stocks are slumping, while the retreat in Treasuries got fresh legs after jobs data bolstered the case for the Fed to keep rates elevated. 10-year yield 4.78% with the 2-year at 5.13%. Spot gold, little change, down $3.50 the ounce to $18.24, down by about 0.2%, while West Texas Intermediate crude is at $89.54 a barrel, up 0.8%. The yen depreciated past the psychological support level of 150 against the dollar, putting traders on watch for possible intervention by Japan to prop up the currency. In the U.S., job openings are up, led by an increase in white-collar jobs. And with that story, here's Bloomberg's Vinny Del Giudice.
We're looking at a 4-month high. Job openings back above the 9 million mark in August. The number of workers who voluntarily left their jobs also moved up, a sign of confidence in the labor market. Friday, the government issues the monthly employment report, and economists are forecasting the jobless rate edged lower in September. Vinny Del Giudice, Bloomberg Radio.
McCormick is slumping the most since the start of the COVID pandemic after the maker of spices and seasonings reported sales that trailed expectations, in part due to a slower than expected economic rebound in China. McCormick now down by 8.3%. Recapping, stocks lower, S&P down 1.3%, 10-year yield 4.77%, the 2-year 5.13%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We don't know who else would want to be the Speaker of the House if Kevin McCarthy loses his job today or in the next couple of days. We're getting a better idea of who does not want the job, though, and that's pretty much anyone considered a serious contender here. Tom Emmer was floated over the weekend by the Washington Post. Hear about Steve Scalise, of course, being treated for cancer. About Jim Jordan, by the way, a McCarthy ally, chair of the Judiciary Committee. We asked him last evening on Balance of Power on Bloomberg. Not so much.
But I do not support that. I think Kevin McCarthy's done a good job. I mean, we told the American people that we would, pass legislation to get rid of the 87,000 IRS agents. We told the American people we'd pass the Parental Bill of Rights. We did that. We told the American people we would pass legislation to deal with the energy problem. We told the American people we would pass the toughest border security immigration enforcement legislation in history, and we did that.
I followed up for what it's worth. No, I do not want to be Speaker, he said. Did you hear him at the beginning as well? That he doesn't support Matt Gaetz in this process?
But I do not support that. I think...
I do not support that. It's what he was referring to was the motion to vacate. But this may be spinning out of control. It's very difficult to tell. We could have votes in the next hour, around 2 p.m. Washington time, that lead us to a potential vote on the motion. Remembering there's an opportunity to stop all this. A motion to table will be the first important view that we have on moving forward here. Rick Davis and Jeannie Shanzano join Bloomberg Politics contributors here as we feel our way through this day. The line from Kevin McCarthy, guys, really something. If 5 vote, I'm out.
If five Republicans go with Democrats, then I'm out. So it's whether likely. Probably so.
Rick Davis, what do you think of the Kevin McCarthy we're hearing from today? I don't even know the word to describe him. His posture was different. His tone was different. He came out of the caucus meeting laughing and seems to be kind of throwing fate to the wind here. How do you see it?
Yeah, all the spin is gone. Yeah, they need 5 guys to side with the Democrats, and I'm gone. I mean, that's like there's not a single spin in there. He's not talking about being able to survive or, what he's going to do when he's reelected or anything. I mean, it's nuts. Maybe it's a liberating thing for him. He's certainly for 10 months been under the knife with this caucus. It's been a rocky caucus. It hasn't accomplish much. I mean, even though Congressman Jordan was talking on your program yesterday about all these things they passed, none of them became law. I mean, they were all dead on arrival in the United States Senate with a Democrat-led Senate. So, you know, I wonder what the history books will say if he's actually taken out of the speaker's job today and doesn't run again or doesn't get elected again. I mean, what will the 10 months of Kevin McCarthy really talk about? It's interesting how little he seems to be worried about it today. A lot of freedom, I guess, on a day like this. It's kind of like election day for campaign managers. There's nothing you can do. Just vote.
That's right. What's the line? Freedom's just another way of saying nothing left to lose, Jeannie? Is that where we are today?
That's where Kevin McCarthy is today. And, you know, when Rick was talking about how history will see him, I was really struck by a piece that we had by Rich Lowry, the editor of the National Review. He described Gates doing this as one of the most witless acts of partisan self-sabotage in congressional history. And he said, to your point about Joe Cannon, he said it makes Marjorie Taylor Greene look like Joseph Cannon by comparison. So this is how some conservatives are viewing what is happening here. And, you know, it is history making. And I think if Kevin McCarthy does go down and is not resurrected, it is part of a much longer story of a caucus that is ungovernable. Ask John Boehner, ask Paul Ryan. This goes back, we knew in January, 15 rounds to get the job and the promises made. And now he seems to be saying, I did all I could. It's up to you. If Republicans go down this path, you know, I don't know how they turn this back at this point.
It's pretty remarkable stuff. Rick, from an electoral standpoint, let's say this actually happens. Kevin McCarthy is removed. Does that ensure a change in majority, realizing it's only, 5 seats next election?
Well, it certainly makes great campaign commercials for the Democrats running in these swing districts. I mean, you think about it, 5-vote margin, and you've got probably 25 to 30 districts that could flip anytime next cycle. So, yeah, if you're Hakeem Jeffries, you're not putting in new drapes in the speaker's office yet, but you're thinking that they're handing you an election cycle, that they're going to come out of this thing looking like the crisis caucus that Jeannie just described. And by the way, we're just beginning down this path. If Kevin McCarthy is thrown out of the speaker's job today, we're in a whole new era of House politics that this country has not seen ever. And so I don't think anybody can predict the political ramifications, but I can tell you it's not what Republican voters are looking for.
No, I don't know that it's what Democrats are looking for either, Jeannie. You just think about the potential destruction here. Shutdown's 46 days away, if my math is right. This could lead to chaos, I think, to Rick's point, on a level we've never seen. How long could we go? Setting records for a shutdown, setting records for time without an actual Speaker of the House. How does the rest of Washington work?
It's very hard to imagine. And the honest answer is we really do not know. We would be in uncharted territory. And, you know, that's why it's so important, I think, to listen to the moderate members of the House. You're talking to Lawler. He is a great example of that. They are talking about the craziness of what is happening here. He is a Republican from New York. He is in a Biden district, and it's not just about electoral reasons. It's the fact that Americans of all stripes, this is insanity at a level you can't explain. You've got to be able to do the basics of governing, and that is not happening. You know, you have a congressman yesterday carjacked, and today we are talking about throwing out the speaker for working with Democrats to keep the House open. That is, or keep the government open, rather. That is insanity, and most Americans know that.
We're going to talk, by the way, with a Democrat next hour. I hope that you'll stay with us as we spend time with Congresswoman Chrissy Houlihan of Pennsylvania. Now, remember, she's Armed Services Committee. You've heard her on this broadcast before, and Intelligence Committee, former Air Force, an Air Force veteran, and has very strong feelings about funding for Ukraine. What's going to happen to that debate with no speaker and no budget? We have a lot still left to learn here on Bloomberg Sound On. More ahead from Rick and Jeannie. I'm Joe Matthew in Washington. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes away from our next market update. We've got the S&P lows of the day right now. Sources tell Bloomberg United Airlines is poised to announce an agreement to buy a double-digit number of Airbus A321 narrow-body jets, and an order could be announced as soon as today. A purchase by United would add to the 120 A321s that the airline has already got on backlog with the European playmaker. Airlines, by the way, do pay about $60 million each for those A321s after customary industry discounts. Macy's is opening new small format stores by the fall of 2025 as it works to expand its presence outside of traditional malls. Olivia Rockman wrote the story for Bloomberg News.
Macy's said today that it would open an additional 30 small format stores in cities across the U.S. That represents a tripling of the number of these types of stores that the company has now. And they're going to do it rapidly. They're going to do it by the end of 2025.
Macy's already operates small store locations in markets such as Dallas, Atlanta, St. Louis, and Chicago, and it announced 4 new ones in August. Macy's shares today, along with the rest of the market, we've got Macy's down now by just about 1.4%. Rival Target higher by 0.4%, and among some of the other retail names, Kohl's Corp. Kohl's down now by 4.1%. And those are some of the top company stories that we're following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where anything could happen in the next hour, and we do have an eye on the House of Representatives as we anticipate potentially a vote on a motion to vacate the Speaker of the House. Right now, we bring you up to date on world and national news. A lot to hear from. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. A vote to remove Speaker McCarthy will be taking place this afternoon on the House floor. House Minority Leader Hakeem Jeffries calls it a serious and sober moment, and he issued a statement that Democrats will be siding with those wanting to remove the leader. He said earlier today Democrats would work with the Speaker Republicans choose.
We are ready, willing, and able to work together with our Republican colleagues, but it is on them to join us to move the Congress and the country forward.
Again, Minority Leader Jeffries. Democrats are cool to supporting McCarthy after he backed out of an agreement on spending levels that was reached with President Biden back in the spring, and also after he okayed an impeachment inquiry into Biden. McCarthy can only lose a handful of Republicans and keep his job. If he is ousted, it's unclear who would replace him. Well, if the next election is about the economy, most Americans are picking a clear favorite.
The latest Gallup poll shows a majority of Americans, 53%, think Republicans would do a better job on the economy compared to 39% for Democrats. That's a 14% gap. That's the widest for the GOP since 1991. And it comes as President Biden is trying to shift that perception.
That's why he's passing laws to lower costs.
Biden campaign just released this ad as part of a 16-week push in battleground states. The Gallup poll finds nearly 3 in 4 Americans don't feel great about this economy. In Washington, I'm Nathan Hager, Bloomberg Radio.
At the White House today, President Biden held a call with allies to reassure them about support for Ukraine. The White House says nearly a dozen leaders were on the call. The stopgap that kept the government open last weekend left out $6 billion in new aid. The president says he expects the House to pass it in a separate bill. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Hi, Nancy, thank you. Remarkable story today. You might have heard about Henry Cuellar, the veteran Texas congressman, a Democrat, was carjacked in Washington late yesterday. He was parking his car when it happened. I guess he lives down in Navy Yard. That's not that far from the Capitol, not that far from where I'm sitting right now, when he was approached by 3 men with guns. He spoke about it with reporters earlier today.
Yeah, I was just coming into my place. 3 guys came out of nowhere, and they pointed guns at me. I do have a black belt, but I recognize when you got three guns. I looked at one with a gun, another with a gun, and the one behind me. So they said they wanted my car. I said, sure, you got to keep calm in those situations. And then they took off.
He says, you don't play with guns. You don't take on 3 punks with guns. So we learned that he's a black belt in martial arts. We also learned that his biggest worry, apparently, was losing his dinner.
What really got me upset was they took my sushi. But anyway, that's something else. And they did recover the sushi after all.
All right, so he got the car back. He got the phone back. He got the sushi back, all within 2 hours. Rick Davis and Jeannie Shanzano, this is remarkable. Does it tell us more about the effectiveness of police in Washington, or that Henry Cuellar is a tough guy? Rick, what do you think?
First of all, I agree. Henry Cuellar is a tough guy. And he's tough because he had a black belt and didn't use it. And that's smart and tough. But yeah, I'm not sure I'd call D.C. a safe place if members of Congress were losing their cars like that.
Hear, hear. Yeah, well, I guess we might hear a little bit more about crime in D.C., Jeannie, or maybe sushi. I'm not sure.
That's right. And this is a story around the country and what our government should be focused on. Democrats in particular, people are very, very concerned about crime in some of the blue cities, many which run by Democrats, including my own of New York City. It's got to be a focus, and they've got to get back to this.
Well, I'll tell you what, we're going to talk to Henry Cuellar at 5:30 Washington time on Bloomberg TV. He's going to join us on Balance of Power, myself and Anne-Marie, a little bit later on. We're going to ask him about that experience. Rick Davis and Jeannie Shanzano, our signature panel. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We have not seen this happen in 100 years. Welcome to Hour 2 of Sound On as Speaker Kevin McCarthy faces his possible ouster today without Democrats to defend him. The implications would be vast, impacting the debate over the budget. Remembering, we have a shutdown looming a few weeks away here, specifically as well funding for Ukraine, with just over 40 days until a possible shutdown. We'll be joined this hour by Congresswoman Chrissy Houlihan, a Democrat from Pennsylvania, serves on the Armed Services and Intelligence Committees and has strong feelings about backing the effort in Kyiv. She'll be with us, and we'll get the Republican view on all of this from strategist Doug Heye, who worked for a Republican speaker and was also communications director for the RNC. So let's get started. We're just getting started in Hour 2. Anything could happen over the next hour here. We're going to find out in real time after an update on Wall Street. Charlie Pellet joins from New York with the latest on the markets. Hey, Charlie.
Well, hello there, Joe Matthew. Indeed, keep it locked in to Bloomberg Sound On for the very latest. Do want to begin with a developing story headline from the Bloomberg Professional Service. More job cuts in the technology industry. Meta Platforms going to be laying off workers from its Reality Labs division. That headline from Reuters. The shares of Meta down now by 1.9%. Stocks are slumping while the retreat in treasuries got fresh legs after jobs data this morning bolstered the case for the Fed to keep interest rates elevated. Here's where we stand, just about the low of the day right now, with the S&P 500 index down 65, a drop of 1.5%. Dow Jones Industrial Average now at 32,961. The Dow is down 471 points, down 1.4%. The Nasdaq Composite Index is down 261 points. That is a drop right now of just about 2%. The yen depreciated past the psychological support level of 150 against the dollar, putting traders on watch for possible intervention by Japan to prop up the currency. 10-year yield 4.79%, with the 2-year at 5.13%. Spot gold, little change, down by about 0.2%, $18.23 the ounce, while West Texas Intermediate crude up 0.6%, $89.39 a barrel on WTI. Connecticut Governor Ned Lamont says his state is attracting new businesses, even as high-profile companies like Frontier Communications leave Norwalk for Dallas. Lamont was interviewed this morning on Bloomberg Surveillance.
Well, I can tell you that Frontier, which was newly bankrupt, did move their corporate headquarters, but, all the staff is still here. But, Citadel and Apollo and Digital Currency Group and Tomo all moved to the state. We're taking sort of an older economy and slowly moving into a newer economy. So I like the trend there.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. WeWork shares are plunging. They have fallen to their lowest on record after the company skipped interest payments due on 5 of its bonds. Right now, WeWork is down by 22.7%. Recapping a sell-off on Wall Street, S&P down again today, down 67 points, a drop of 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. Here we are without a clue of what happens next. These are the best kind of conversations when we tear up the script and wonder what we're going to witness. We'll do it together here on Bloomberg, on the radio, on the satellite, on YouTube. If you want to join us here in studio, get to YouTube and search Bloomberg Global News. The cameras are lit up as we wonder what the next move is here. We started the day knowing the motion to vacate had been filed. Matt Gaetz took care of that last night, sort of anticlimactic, as Democrats laughed while he left the chamber. Kevin McCarthy shows up this morning with a dose of reality. 5 votes and I'm out.
If five Republicans go with Democrats, then I'm out. So it's whether, probably so.
Now, when he says go with Democrats, he's referring to the fact that he does not have Hakeem Jeffries at his back. And this was a big question until today. The minority leader making it clear that Democrats are not going to be spending time protecting Kevin McCarthy. His statement was certainly clear, as was a statement from Nancy Pelosi. The first line says it all. The Speaker of the House is chosen by the majority party. Pramila Jayapal, who chairs the Progressive Caucus in the House, took it a little further.
This is not a Democratic problem. This is a Republican problem. They supposedly have the majority. They should be able to pick their own speaker. Our speaker is Hakeem Jeffries. It always has been. It was for 15 rounds. It will continue to be.
So does that mean here that just nobody trusts Kevin McCarthy?
Nobody trusts Kevin McCarthy. Nobody trusts Kevin McCarthy. And why should we? He has broken his commitment over and over again.
Okay, so this is how we started today. Now we're waiting for the votes. There's going to be a motion to table that would precede a motion to vacate. We'll let you know, of course, as this happens with actual action happening on the House floor right now. You can hear the House. We'll keep an eye on it for you as we work our way through the hour and bring in Nathan Dean from Bloomberg Intelligence, senior government analyst, U.S. policy analyst, and Michelle Jamrisco is with us as well, Bloomberg News White House reporter. Great to see both of you here. We thought we'd call you in on a boring day. Look, I'm not sure where to start with either of you on this because it's so difficult to tell where we're going. So let's start with what we know, and that's, I believe, 46 days until a possible government shutdown. This has been a sweet spot for you, Nathan. We talked about it weeks into what happened over the course of the weekend. How do you solve the budget, I'll say battle, not crisis, if you don't have a Speaker of the House?
Well, you sort of need a Speaker of the House, right? If we get into this situation where we're voting for a Speaker, no business can happen until you have that Speaker. But what we have seen is you take the battle that took place in September, you pick it up and you put it in early November. The only difference is that the month of October, if you presume this Speaker issue is resolved, it gives both the House and the Senate more time to work on appropriation bills. Now, those bills aren't going to pass, but it gives them a position to actually begin to negotiate. And then that's all we need at this point is time for negotiation. Now, when you get to November, we're probably going to be in this same situation again. You're going to see lots of headlines about government shutdowns and so forth like that. But I just remind everybody that there's been over 190 some continuing resolutions since 1998. Chances are we're going to see another one come November.
Fair enough. Michelle, I'm just picturing Joe Biden over there with the aviators on, elbows up on the barrel, just really getting a kick out of watching Kevin McCarthy flounder. But this is a big deal today. Hakeem Jeffries says Democrats are not voting to defend you. I'm assuming he's been in concert with the White House on this. Is the West Wing saying anything today?
Well, yeah, that attitude you hear from House Democrats today, this sort of, this isn't my circus.
Yeah,
you deal with your civil war in the party yourself. That is something that we've heard kind of reflected from the White House as we ask the White House, press secretary and others from the podium about, what are you going to do if you don't have a speaker to deal with, or if it's a different speaker, or are you concerned about this or that, or funding running out? And their attitude is that's for them to deal with. But of real concern today, especially, is the Ukraine issue. Now, that was the big thing omitted, of course, from the short-term spending bill.
Yes, right.
$6 billion is the ask. We were just here a couple weeks ago talking about President Zelensky's in-person plea to Congress for more aid, and that is the big one that they're talking about today. We had NSC spokesperson John Kirby talking about how it shouldn't matter who the speaker is. All the House leadership on both sides, as well as strong support in the Senate, shows that they can get this done. Biden had a call with allies this morning, and Kirby says none of those leaders expressed concern about continued U.S. support. They just need to do it. They just need to get it through.
You wonder if they should. We're going to talk in a few moments with Chrissy Houlihan about this, and she's passionate about it. A lot of Democrats and Republicans are. But this has become a much more contentious issue, and I wonder what's the vehicle then? Nathan, where does Ukraine funding emerge here? Is it in an old-fashioned defense spending bill once the budget is solved?
I'm not exactly sure. I think more likely than not, it's just going to be written on the back of a napkin between
So then Matt Gaetz is right. He said there's a secret deal about Ukraine.
I'm not sure if I would call it a secret deal, but the negotiations between the leaderships of the parties. Yeah. Because ultimately, what you are going to need to get this government funded past November 17th is a bipartisan deal. Now, a bipartisan deal it had to happen. That's why Speaker McCarthy, I think, folded. He got that bipartisan deal. You're going to have the same thing happen again in November 17th. All this talk about Republican wish lists or trying to get some of these Freedom Caucus ideas in there, you're never going to get it past the Senate, and you're never going to get it past the White House. And the White House, thinks they're in a pretty good position. We've heard President Biden essentially insinuate, look, let's let the Republicans figure it out, and, we will negotiate at that point. So I think that's where Ukraine comes in. You're not going to see it as part of, I think, the appropriation bill language. You're probably just going to see it as part of a continuing resolution, a deal. I'm not going to call it a secret deal, but a normal deal that you would see party leadership negotiate on.
Well, of course, this is all semantics, right? I mean, Matt Gaetz called it a secret deal, but that's what makes the world go around in this town.
Yeah, and I don't know what normal is these days.
You
just use the word normal, and I'm not really sure what the vehicle would be either, and I don't think anyone really knows at this point. But
it could be a standalone supplemental. Here's your Ukraine money.
There's also the element that McCarthy, in order to placate members of his own party, the hardliners especially, that he wants to tie it to immigration and border security issues. Right. Non-starter for Democrats. So when are you going to get people on board?
But that's DOA in that world, or is there a compromise to be had?
We'd have to ask our congressional bean counters up on the Hill. We've got a lot of people chasing that. I'm not sure what the numbers are at that. Yeah,
that's the problem here, right? We're doing this in real time, Nathan.
Yeah, absolutely. I mean, and at least from the market standpoint, the markets tend to not react to this all that much. I mean, when we've seen government shutdowns, even if you go back to the 35-day shutdown under the Trump administration, we saw markets have a few days of uncertainty. And then once people began to realize this was a Washington problem, not so much a New York problem, the markets began to act a little bit more, I don't want to use the word normal again, but a little bit more, with a little bit more clarity.
Yeah.
What we can tell our clients, at least in this situation, is that even though we don't know what's or how it's going to happen, we do think that the government will be funded at a certain point. It probably will include Ukraine aid, because I think if you were to give the majority of members of both parties truth serum, they would say they would vote for something like that. And ultimately, a bipartisan deal is the deal that has to keep this going, because if the government does shut down on November 17th, you're going to get into Thanksgiving. Contractors aren't going to get paid. People will be furloughed. People will be angry. And more likely than not, they're going to blame the Republicans going into an election year, which is what I don't think many people on the Republican side want.
This is pretty remarkable stuff.